that's recording started. And then I'll have open my scalping setup just in case something comes up on stream, and I'll also open up TradingView, which is what we're going to be looking at today. So we're going to work our way down from the Dixie. Jesus Christ, what the hell's happening here? None of my alerts triggered. Okay, one sec. We'll go through all of this first, and then I'll actually go on to Bitcoin, Ethereum, so on and so forth. Okay, we'll go through all of this down to total three against, sorry, down to Bitcoin against gold. That's what we'll go down as low as that, and then move on to the actual crypto side of things. So before we get started, catch up with chat, and then I'll go. Yeah, I've got the recording, brother. I'll put it on my YouTube, but I can send you guys the link if you want as well. ENA. Yeah, sure, brother. Just send me your email, and then I'll get it sent to you. I did. I'm already short on ENA. I'll go over that in a minute. I shorted when the rejection came in. It's going to be a scalp though. It's not like a swing or anything like that. These lows, just as a hedge for the two longs I've got going based on the last YouTube video I released a few days ago. But first and foremost, Dixie. This is nice to see, I suppose. Dixie breaking down back into the old range. This is what we were talking about in the last video as well I released, right? We're saying you've distributed on the Dixie, you've hit very, very key levels. You're now, if you lose the 382 around the Dixie or macro 382, which has been propping you up for a long time, this is what literally gave you that liquidity rate back in 2023, right? Which is when a lot of alts ran for this period. We've lost that again. We're back below the old range. So what I'd want to see for Dixie now is I want to see this, right? Move up, and then just have the cleanest rejection around either this or at the max around this area here. If you can do that, I think you go and pretty much take out the range lows next, right? Because you've broken back into the old range, and the original range was between the two black lines. This is also a nice backdrop for why did alts get a little bit of relief like over the last 2 days. Even though it isn't much, it's still a little bit of relief, right? We're seeing that inverse correlation, right? We're seeing Bitcoin, of course, the SFPs on Bitcoin, we're seeing those. So if we were to go back to Bitcoin over here, right? All those wicks, all those SFPs, those huge sell-offs were met with intense buybacks, right? So that is the inverse correlation that you're seeing right over here. Again, for those of you that are not familiar, it's not a X equals Y relationship. It's a X equals 1 over Y relationship when it comes to looking at the Dixie and then risk on markets as a whole, right? If you have a strong Dixie, that is, you're looking at the inverse correlation. Therefore, if the Dixie is strong, typically that's going to be correlating to a risk off environment. And if the Dixie is weak, that's going to be correlating to a risk on environment, right? People are going to be fleeing from the dollar, basically is the logic, and going towards risk on assets, right? Don't forget the Dixie is a collective strength of the dollar. It's not an exact representation of the dollar itself. It's a collective strength. It's the relative strength of the dollar against a basket of other currencies. I think it's like 7 or 8 currencies in there, if I'm not mistaken. But it's just how strong is the dollar doing according to those. So if the dollar is looking weak against those, we're basically saying, okay, that's a risk-on environment. Why would I just hold on to the dollar where I'm going to be losing my monetary value, right? When I can just maybe put that into something else that's a bit more risk-on, that's going to maintain its value against the dollar, right? That's the logic we're going with here. That's why we say there's a X equals 1 over Y relationship rather than a X equals Y relationship. So beautiful to see. You have support right now, which was the old range mid, right? So obviously from here, it's not going to be a surprise if we do bounce up. What we don't want to see is a reclaim of this level, right? That reclaims, this is going to be a huge deviation back into previous range and an intense buyback, meaning what was once resistance is now support. And then I'd actually expect Dixie to go on and rally on higher, right? So we just want to see that trend continue, the break of structure continue with another lower high and then really send it down. Also speaking in terms of seasonality, for your crazy like euphoric alt seasons, we have always had a Dixie that is just shitting the bed, right? So we need the Dixie to be crashing until it's proven otherwise. I'm going to stick with that thesis, right? We need a Dixie that's bleeding down to have that euphoric alt season everyone wants, just because that's been the case every single previous cycle. Maybe this is the first cycle where it correlates, like decorrelates, sorry, but until it happens, that's not something you can really account for, right? So that's the Dixie so far. I'm just going to keep tapping back into chat in case there's any questions. Is Pi a possible BTC parabola? Do you mean Pi coin? No, you know that like free to mine that you can mine on your phone, that Pi coin. Is that what you were talking about? If that's the case, I don't think that's going to BTC's market cap. I'm afraid to say, bro. Yeah, we'll go over Solana, John. Yeah, we'll go over Trump coin. We'll go over all of those. Yeah, no, I don't think Pi goes on like a BTC like run. Um, it's a coin everyone got for free, right? At the end of the day, who knows? Maybe it does, right? But I wouldn't benefit from it for some reason. I think it's the way I migrated all my pies like locked until 2027. So even if it does go on a BTC like run, I won't be able to take profit. So I don't care. But I don't think it will. If you look at the FDV, the floating market, so much of Pi is still locked up. Once the entire thing comes out, that's going to be one of the most diluted coins there is, bro. You got to consider market cap as well. I don't think Pi is going to do anything like that. So, okay, so that's the Dixie. Let's look at USDT dominance next, right? So for those of you unfamiliar with this, what is USDT dominance showing us? This is showing us the market cap of USDT dominance, right? If you think about the crypto market like a pizza piece, right? Like a pizza, how much of a slice is owed to USDT basically in terms of market cap is what this chart is showing us, right? Once again, just like the Dixie, anything to do with monetary representation. Okay, since this is a monetary representation, as USDT is obviously a US dollar like denominator, right? Anything to do with monetary representation is always going to be a x equals 1/y, especially when it comes to the dollar. Okay, meaning this is also inversely correlated to the risk on markets, right? In this case specifically, this is pretty much right. It's pretty much going to be a one-to-one relationship with the crypto markets. Okay, if USDT dominance is going up, think about it logically, right? If the slice, if the piece of the pie, if the piece of the pizza, right, slice of the pizza that's owed to USDT dominance is increasing, as this slice gets bigger, that just means that the rest of the what's remaining gets smaller, right? So if this is now showing you how much money is in USDT, and this is showing you the rest of the crypto market, then logically speaking, as this gets bigger, the rest is going to get weaker, right? So again, that is another just visual way of thinking. Why is it an inverse relationship? It's for this exact reason, right? As people flock to USDT for safety, right? As people think, oh, you know, this doesn't look strong here, I'm not going to buy, I'm going to hold on to my money. Or I'm going to sell here, I'm going to hold on to my money. Predominantly, it's going to be settled in USDT, right? That's the biggest crypto stablecoin there is right now. So if more and more people are flocking to USDT, that means there's less and less money actually circulating around exchanges, right? Around decentralized exchanges, so on and so forth. There's less and less money out there to actually buy with. There's less and less liquidity in the market. There's less and less money to defend your support levels, right? So it becomes much easier for sellers to just absolutely slice through support, right? Which is why we say, once again, this is an inverse relationship, right? As this gets higher, we're saying that the amount locked in USDT is getting higher. Therefore, there is less ammunition to take on the rest of the market, right? That is it. So once again, should you be long or should you be short? Very, very important questions to ask. If you look between USDT dominance and Dixie, those are the first two things you should do as a trader. Okay, if the Dixie and the USDT dominance are sat at support, right, and especially for crypto, right, even if you're a bit lax with Dixie, at least USDT dominance, make sure you look at this regularly. If this is sat at support, you do not open some sort of high risk long with the entire net worth, right? Because if the support holds and this bounces, like we said, inverse correlation, there's just a higher chance that whatever you're holding is going to be bleeding. Okay, so we use this interchangeably, right? How do you know when you should position for longs versus shorts? If this is at resistance, that's when you take longs, right? If this is support, that's when you take shorts, right? If you're already long and then you go down into here and you think, I want to protect my long, you can hedge short, right? You can hedge. Your trading dynamic you can very easily base on a macro level around the USDT dominance chart. Again, it's not just the USDT dominance chart. If you prefer, you can look at USDT plus USDC dominance. You can look at like USDT plus USDC plus like DAI plus, so on and so forth. You could have a collective chart like this that shows you the combined market cap of all the stablecoin issuers there are, right? But no matter what you look at, it's still going to be the inverse relationship, is the point I'm trying to get at here. So for now, what's USDT dominance doing, right? Nothing's changed since our January stream, to be honest, in terms of macro levels, right? So when we looked at this in January, we were down over here. And what I was saying, if you guys remember in January, if you were here, was I was saying, we're probably just going to chop around this box using this red line as support, right? So this blue line here, think of it like a line of best fit, right? So you can see this is the area where anytime you come down, you have some insane reactions up, right? Meaning this is very, very key support. This is very, very strong demand, not just because I say so, because price action itself says so, right? Historic price action is telling you, if you come down here, the trend here is telling you this is going to be a strong support, right? So below that, if we break down, however, we do have one extra thing, right, that I like to do, which is look for a quote-unquote range extreme in terms of diagonals, right? So the most extreme you can make this, locally speaking, for this area is from this wick low to this second wick low down over here. As long as you have two taps, for me that's a valid line, right? So you just extend that outwards, which is how we got this red line, right? Now this red line for me, like I said, was the range extreme. If you want a full-blown euphoric hold season and BTC to make new highs, or at least go back towards 110, so on and so forth, you need to see, for BTC to make new highs, firstly, in my opinion, you want to see this broken down from, right? You want to see this turn to resistance, which is the same thing I was saying over here. The only problem is we did not turn into resistance here, right? We kept holding it as support. And if you want a euphoric hold season, you definitely need that, because only when you see a huge amount of money is flowing out from USDT is that going to be correlative of, okay, unless some sort of black swan comes in that just absolutely collapses USDT as a company, right? As a stablecoin issuer, which is a completely different matter. Only when this line is lost do we actually go towards our external targets to take these out, and that's again going to be representative of the market cap of USDT going down, meaning that there's now more and more ammunition in the market to buy up these altcoins, right? To push these market caps higher and higher and higher, to push AVAX towards $80, Solana towards $300, $400, $500, right? Ethereum towards $5,000, $6,000. That's only going to happen when we deploy our ammunition, which we haven't done yet, right? So as long as what we're doing right now on USDT dominance is, we have what I've got here on the right is a key levels based on 6 months, right? So think of these like support and resistance. We have 6-month resistance levels here for now, right? Support / resistance. We are an SFPing off it, which is good, but what is to be wary of, right? Which is the warning I gave in the last few YouTube videos I did is, if you see a reclaim of this level, right? Especially this low here, and of this blue box, be very careful is what I said. So we got the reclaim, and that is what actually spiked us up towards our target of 5.53%, right? So as long as we're above this blue box, I won't be surprised, honestly, if, I won't be surprised if we did go up back towards 7%. Okay, I'll say that right now, because as long as we're over this blue box, we're saying we're back within this range, and if we're back within this range, then historic price action says this is not an anomaly, right? This would be very, very logical if we did go back towards here. Now, if we keep projecting here, and more importantly, we get under the mid of this red box, and let's say by the time, like, March ends, April comes, we're trading below it, and we start trading within the blue box below the red one, then you'd be looking for moves down, in my opinion. That's the bullish scenario, right? The bullish scenario is us treating this as deviation and then coming back down to actually come and attack the range lows, like I said. But if you keep hovering above, and more especially if you then start flipping 4.94% into support, I think we have a swift wick up coming towards like 7%, right? It just makes sense, look, because above 5.53%, that is the range you're in, right? So then the range mid at least wouldn't be a problem, right? And then we want to see that reject some macro lower high, right? And then perhaps we get the breakdown. And this scenario, if we do go towards 7%, is what's going to give us BTC between, like, let's say 70 something to like 60 something, in my opinion, right? That's what's going to give us that target for Bitcoin. But that is USDT dominance, right? Above this blue box, it's going to be scalp to swing mindsets, in my opinion. Holding spot is a completely different matter to try and build a leverage swing long position, right? So when I say it's a scalp to swing mindset, I'm talking specifically for leverage, right? Buying spot's easy. You don't have to pay funding fees. You buy it at key levels, forget about it, and if it hits your invalidation, you cut. With leverage, there's way more to worry about. You have to worry about your risk. You have to worry about your funding fees. How much are you going to pay, right? Are you buying at the right time? Because you could be right in your levels, but you could be completely wrong with your timing, right? These are all things you need to consider, because way more goes into now leverage trading, right? So for leverage trading, as long as you're above this, it'd be a scalp to swing mindset for me, right? What I mean by that is any trade you take, you're going to enter with the scalp mindset in mind, and then once you've de-risked some based off your scalp trade, you put your stop loss to break even, and then you attempt to turn it into a swing. right? That's the scalp the swing mindset. It doesn't make sense to be fully positioned for a swing leverage long while it's still over, while USDT dominance is literally trying to reclaim support. Because like I said, if this reclaims support and it goes up, all your longs are going to get absolutely hammered. Okay. So that's just my quick thoughts on USDT dominance. Once again, let me just check back to the chat, make sure everything's fine. Uh, 3.75 is key fault season. Yeah, for me, like 3.7, we break that, and especially 4.0, right? This area here, we start doing this, we're very, very good. This could be very delayed, like I said, right? Start of April. If we manage to do this, and then turn this area, give or take, so this round here is March. Actually, no, that's 2026. Never mind. That's I was looking at this area here. Yeah, if we manage to do this and something like this by latest, I'm gonna say July, I think we get a delayed old season, but it's gonna come nonetheless, right? The problem is people need to think it needs to happen this week, needs to happen this week. Like you always have more time than you think. We have intersections down here where, as long as by the time we basically get towards, let's say July, right? As long as we're below this and then treating this as resistance, we're gonna get that insane move down that we want. So, and if we get below before that, even better, right? The only thing we don't want to do is by the time July comes around, be above this as support, because then it's just like, you know, you've got room to go higher again, right? Which just throws, it just ruins the old season vibes. Okay, so USDT plus USDC dominance, that's another one I like to look at. The thesis is the same, right? The only difference is this is showing you the market cap now, both USDT and USDC together, right? The two biggest stablecoin issuers together. For me, makes sense to look at it. My bear market target, sorry, my bull market peak target, right, is still around, let's say, 2.81% to around 3.06%, right? As long as we get somewhere within this zone, right, somewhere around here, we have a bat, right, a macro bat that could complete a macro bullish bat, right? We have diagonals that line up with us since the start of this chart. So a lot in terms of confluence down at this area. So if we do confirm this to be distribution, and again, you know, we keep treating the diagonals here as resistance, I would be looking for the breakdown and the continuation of the trend we're in, which is a downtrend, right? We're not in an uptrend in this chart. We're in a downtrend. High, low, lower, high, lower, 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 low. And then another lower high, and then that's a lower low. So, you know, as long as we put on the lower high, trend is still with us. That's distributive structure, inverted smiley face that could build here. So, you know, next time we come down here, I'd want to see this turn to resistance and then us go and absolutely target this, right? So we have to, like, you know, midway through next year, if we get a super delayed cycle, right? It doesn't have to be this year. We could definitely correlate in terms of time. But yeah, for me, once this macro bat completes, I'm going to be looking for some sort of bottoming structure to come in. I'm going to look for some sort of a cumulative structure to come in at these areas, right? Signs of, you know, seller exhaustion, right? Signs that, oh, there's aggressive selling going on here, but the buyers are defending. Aggressive sellers are not being rewarded. Once I see signs like that, I'll be the first person to tell you, right, we look toppy as hell. I'm going to open some swing shorts. I'm going to take heavy profits across the board, and I won't be scalping long. And then if I'm going to be opening any swings, it's going to be towards the short side, not the long side. Right, because then, of course, again, you have a macro harmonic completed that's bullish. You're looking for, you know, T1 first, right, and then T2, so on and so forth. Those moves up are going to correlate with, again, money being locked back into stables, i.e., less ammunition in the market. Therefore, just prices going down across the market, less liquidity in the market, right? That's my current plan. Of course, we might not get this, right? Just because there's a nice M shape does not mean we need to hit it, but this is just a potential target for now, right? There's just an XABCD shape that could hit in the future, which is why I've got it down. And if it does hit there, then I have a high confluence area to read price action around. That's my whole thesis with this. So let's look at Bitcoin dominance next. And in fact, for Bitcoin dominance, I'm going to open this chart up over here. There we go. Okay. As you can see, Bitcoin dominance is extremely strong. I put down yearly levels on the left. So these are your yearly support resistance levels. These are not going to be how people typically get support resistance. Like if you can't find these, if you're trying to do this on your own chart, I've got my own system. I'm getting this based on my own system, but these are yearly levels, right? Yearly support resistances. And for Bitcoin dominance, my target right now is still this 2-week fair value gap we've got above us, right over here. As you can see, that 2 week fair value gap lines up, right? The mid of that lines up with a very nice 4-point wave structure. We have a B, C. So the D point of that would line up with the mid of the weekly fair value gap. So for me, some more drives up on Bitcoin dominance wouldn't be out of the question, right? So now for local price action, your first resistance is going to come in at 62.62%. Then it's going to be this cluster at 64% basically, let's say, right? But if you get above that, I think that's when the 1.618 hits. But what we're doing here is, again, bullish for Bitcoin dominance. What we're doing is we're flipping a monthly seller zone, i.e. an area on the monthly where sellers were in control before. We're flipping that into support, right? So an area where sellers were in control, buyers are starting to take control. You're holding your 2019 yearly levels, right? 61.11%. You've turned your 2022/2021 yearly levels into support already, as you can see right over there. So, the stage is set for this to go higher, in my opinion. I think, and if this flips, then there's nothing else to it. Bitcoin dominance is going to go towards 70%, right? And at the end of the day, right, it might be pain on the lower time frame or local time scale if Bitcoin dominance does go towards, 70%. But, the higher this goes, at the end of the day, think about it like this, right? The higher this goes, the better your alt season that you're going to get eventually is going to be. So, even if you get local pain, because it keeps pumping higher, the eventual alt season that's going to happen once Bitcoin dominance does top out is going to be even sweeter, right? Because the higher this goes, the more distance it has to fall. So then that's just more liquidity that's going to be rotated into altcoins, basically. So that's Bitcoin dominance. Nothing bearish about this. This is telling you that unless your Bitcoin pairing for your altcoin is looking absolutely bonanza, right? It looks absolutely crazy. Bitcoin's probably going to outperform many altcoins still, right? When whatever the next move is happens. Let's say we get the next market-wide flush because of Powell today. This is telling us that, okay, as things stand right now, Bitcoin's going to fall less than any altcoin will, right? So you're going to lose less of your net worth if you're in Bitcoin than, let's say, if you're in Farcoin or some random shit like this, basically, right? That's what this chart is saying. And it's also telling you right now, if you do get a pump, then Bitcoin's probably going to be the one that pumps harder than many alts, right? Because Bitcoin dominance is going to be increasing. So again, unless your Bitcoin pairing looks absolutely insane, if you are thinking of trading and you have limited liquidity, honestly, like, you can literally just make a living trading Bitcoin. And I say this with full sincerity, right? You don't need to be trading like, the most obscure shitcoin, think you need to make 1000x. If you have a risk management system, you have a system that works, of course, right? Like, you can trade with your system. You don't have to manage risk. If you trade Bitcoin on a regular, you can make more than enough, right, to make a living off of, right? So let's say let's say if you were to work minimum wage somewhere and you were to get paid like $150 on the day or something like this, you can very easily make that, in my opinion, just trading Bitcoin. You don't need size for that, right? You don't. You just need a strategy on the lower time frame where you can take risk at significant areas where, you're taking some risk, but if you're wrong, very limited risk to yourself, right? You're just trying to hunt for those high RR plays. Bitcoin, honestly, on a regular basis, all I'm scalping is literally just Bitcoin, right? I don't look at any other chart for this, just Bitcoin. That's it. You can make more than enough. So Bitcoin dominance is a very important one to look at because, again, for those of you not familiar, how do you know when is it a good time to get into alts, right? Of course, we're going to look at total 1, we're going to look at total 2, so on and so forth. But one good way to know whether you should be in Bitcoin or you should be in alts is by looking at the Bitcoin dominance chart, right? Firstly, if Bitcoin dominance is a resistance, that is a good time to try and catch some longs on alts. Why? Because if you reject from resistance, that means Bitcoin dominance is going to go lower, right? And if Bitcoin dominance goes lower, same as USDT dominance we talked about earlier, that means the market cap owed to Bitcoin is decreasing, right? So then there's a chance that liquidity is going to rotate into alts, right? That is the reason why I say this. And if Bitcoin dominance is a support, it's better to be in Bitcoin rather than alts, because if it's a support and it bounces and goes up, that just means liquidity flowing into Bitcoin, right? So you might as well be where the liquidity is flowing to. Now, if you're at resistance, how do you know which alt do I get into? You look at Bitcoin pairings, okay? Bitcoin pairings, if you guys don't do this, you look at this. You can look at pairings for anything, but Bitcoin pairings is probably the main thing you want to be looking at. So for example, here's some key alts, right? Solana, AVAX, Aptos, ENA, TON. These are the ones I'm looking at mainly right now. BTC pairing means instead of looking at the US dollar denomination, you're looking at the Bitcoin denomination. Okay, so if I go back here and I go to Sol against BTC, for example, this is now showing you the Solana chart, yes, but it's not showing you the Solana chart against US dollar, right? Which is what most people are used to. This is showing you the Solana chart against Bitcoin, okay? So what this chart is now going to be showing you is the relative strength of Solana compared to Bitcoin rather than the US dollar. So if this chart looks bullish, that means Solana looks bullish against Bitcoin. If this chart looks bearish, that means Solana looks bearish against Bitcoin, right? For example, right, a huge amount of my Sol holdings were bought literally down when Solana was at the lows, right? And one of the main reasons for this was because of the Bitcoin pairings. If you look at what the Bitcoin pairing was doing for Solana back in 2022, 2023, right? You completed a macro M shape, XABCD, and for those of you unfamiliar, this is called a harmonic pattern, right? This is wave structures. We're using fibs plus wave structures together. This is a 5-point wave structure that we call a bullish bat. You hit the 886, right? You hit the 86, you had the initial reaction, came down, you reconfirmed the reaction. This was also happening at, key levels, yearly levels. Of course, the 2023 hadn't completed yet, right? But that 2022 level had completed by the time this test came in. So you came down, you retested your 2022 yearly level, you confirmed it to be support, right? Your local support resistances, you made a higher low one, you put a smiley face structure in there. That's called I call this a smiley face, i.e. a cumulative structure. Bullish order blocks were filled. Basically what I'm trying to say is, no matter how you looked at it down at this angle, right? Yes, there was so much bearish news coming out for Solana, but in terms of technical analysis, because fuck news is TA over everything else, in terms of a TA perspective, there was absolutely nothing bearish about this right here. It was the same with the actual Solana chart itself, but even against Bitcoin, right? Solana was looking absolutely amazing. 886 hit, yearly levels retested, right? So you've got confirmation of this 886, your PRZ's been validated, right? And therefore you now have a sign telling you, okay, look, yes, Solana unlocks might be coming, right? Solana dumps might be happening. The thing with FTX was happening. But even in the face of all that, Solana still looks this bullish, ready to outperform, right? And then you got the breakout, retest, right? And this was especially true of the US dollar chart, but even on this, I wonder what happened. Yeah, there you go. You got the breakout and successful retest, right? This was the moment when I bought a shit ton of Solana, a lot, right? And this was Solana down from single to low double digits. Like I'm talking, the low it went to because my limits got filled, and then up towards 18, right? And then 20, so on and so forth. Just bidding, and then you just wait till the breakout happens. You hit your terminal 1 zone, you fly straight past, you close above B, you don't have to take profits, right? Because sellers weren't active here. And then you flip your terminal 1 to support. You hit your T2 zone, your terminal 2, your second target, and then you consolidate, right? So this is where I took profits. And then now what you're doing is, yes, you look slightly weak in the sense that you have now turned this terminal 1 into resistance, right? But you can very easily recapture firstly, and the recapture would be beautiful because you're also going to be reclaiming a lot of yearly levels. But even if not, you have a yearly level just below you, right? You could very well raid, reclaim, and do something like this. Even if you don't and you come all the way back down, on the macro, that's simply going to be now, here's your type 1 impulse, type 2 return, right? If you put any sort of high low in here, or you raid double bottom, or you double bottom, whatever, if any of this scenario were to play out, you have one massive type 2 on the Sol against BTC pairings, and if the type 2 is successful, I'd be looking for a massive impulse move straight back up next. Right? Of course, not up in one candle, but then you have a reason to believe, okay, well, why not just target the range extremes again? Go for the other side, right? So you look at BTC pairings, right? And when you see Bitcoin dominance at resistance, or if you want to know, should I be in Bitcoin or should I be in altcoins? If your altcoins has a Bitcoin pairing that looks like it's about to absolutely rip Bitcoin a new one, then you can take the risk on that altcoin, right? Otherwise, there's no point going further out for the risk curve for less reward. Right? Because yes, coins like Solana outperformed so far this cycle, but many alts didn't. Right? And if you look at this Bitcoin pairings, it would have been blindingly obvious this coin doesn't look like it's going to do jack shit against Bitcoin. Right? Many alts still making lower highs and lower lows against Bitcoin in the Bitcoin pairings. Right? So to know which one do you rotate into, you actually look at the Bitcoin pairings, and of course, it's not just the BETH, right? Bitcoin pairing. Now you can look at ETH pairings as well. So Solana against Ethereum, for example, right? You can look at that. Solana against Ethereum raided the lows, put a double bottom, reclaimed the low. So this was looking good against Ethereum as well. So this would have been a really good sign saying, you know what, maybe I should sell some of my ETH and put it into Solana, right? If you had to choose one, you'd be like, okay, you know what, instead of Ethereum, maybe I'm going to get into Solana because yes, Ethereum might perform, but this thing's raided the lows and reclaimed. Like there's an argument for this to go way higher, right? So then against Ethereum as well, this was good. And this was another thing I put down. I gave in the YouTube video, right? I also gave in the channel. Sold against ETH, it recently hit a deep crab, right? It hit a deep crab and distributed, and that gave you that move down, right? So that move down to $123 Solana, right? Ethereum held up very well when Solana was doing that, right? And again, that's because now on the Sol against ETH chart, Solana went, extended, and now this looks distributive, right? So now that was telling us, you know, at least to get to T1, Solana looks like it's going to outperform Ethereum to the downside, right? I.e. Solana looks like it's going to drop more than Ethereum will in value in the coming time frame. And that's exactly what happened until we got here. And now, you know, if T1 does hold, we could very easily go up, get some sort of type 2. And if it flips, then, you know, we don't have to worry about this. This is going to go higher. But if you do come up, distribute again, and then come down, then once again, this is just going to be telling us that, you know, Ethereum is likely to outperform Solana. Right? So another thing to watch here. But, you know, Bitcoin pairings, Ethereum pairings, you can pair any two charts together, right? The important thing is, if you do this mainly, the strategy here is, how do you know when to get on into one over the other? How do you know which one would you rather long, which one would you rather short? Or if you had to hold one of the other, which one would you rather hold, right? To answer that question, you look at the pairings, okay? Went a bit off topic there. Well, it wasn't off topic, but went a bit to the left there, but just thought I'd explain that, just in case people here weren't familiar with it. But let's go back to here. Let me check back to the chat. No audio. Is it fixed now, bro? Octopus. Okay. So, 1 second. Okay. Nothing much is happening right now. Let's next then. That was Bitcoin dominance, right? The Ethereum dominance is also something you should consider. And in fact, I'm I've been watching this like a hawk because I really want this bat to hit on ETH dominance, right? If I go back to this chart here. And I go to focus, and say, okay, that's fine. And I go to ETH dominance. Just like Bitcoin dominance, this is showing you the dominance of Ethereum, right? So again, you can see Ethereum dominance is at very key levels. It's not at the 86 quite yet, but for, you know, to be honest, if it bottomed here, I'd still call it a bat, right? Because it's very close to an 886. You know, I'm a bit autistic when it comes to charts. I want that exact tap if I can, right? So I'm going to hold out for the 886 for now. No signs of strength here anyway, so there's no point saying, oh yeah, the bottom is in. But we are at a very significant level. Hopefully you guys can see that. On the weekly, area where buys were in control in the past, area where you accumulated in the past, you're back at that area, right? Even if you raid, I don't want us to lose this area on the higher time frame, turn into resistance. I don't think we will, but let's see. It's ETH, I don't want to jinx it. What this is going to be telling us again is this is the dominance of Ethereum, right? Yes, this is absolutely nuts. This is bearish. This looks like an absolute shit coin, right? In fact, there's shit coins that look better than this. But what you can't ignore is the area it is coming to. Deep value, 886s, bullish M shapes. So once again, if this 886 comes, if you come down to the 886, you chop some more on the lower time frame, but you hold this and you start putting a cumulative structure in here, then that's a very good sign that Ethereum dominance might be beginning to bottom out, right? And again, what does that mean? That means now from that point onwards, you're looking at Ethereum dominance to climb, i.e. you're looking at the market cap of Ethereum to climb, i.e. you're looking for money to flow into ETH, right? So Ethereum dominance is coming through to very key areas. I'll just keep an eye on this one. This will also be important, just like how we looked at Bitcoin dominance. When there is typically, like, so in the different bull cycles we've had in history, we've always had a period where Ethereum has taken the lead, right? It's been like, you know, previously used to be the case that Bitcoin, you know, you go into Bitcoin first, money rotates to Bitcoin, Bitcoin absolutely rips. Once, you know, it becomes extended enough, people start taking profits, and then that liquidity then flows to the next altcoins, right? So the next biggest market cap would be Ethereum. So then Ethereum, there'd be a period where Ethereum would pump, right? Ethereum would take the lead, and then after Ethereum ran, that's when altcoins would run, right? So there was a, you know, you might have heard referred to as the market cycle. That's not been the case this year, right? So we might be seeing some decorrelation coming in. It's not a big surprise considering we've gone from like around 18,000 cryptocurrencies back in the 2021 bull run to like I think around 5 million this year, right? We're absolutely diluted. We need a big crusade. We need a purge against many of these shit coins, right? It's absolutely sucking liquidity out of the markets. But Ethereum, seasonality wise, until proven otherwise, I'm still going to be hoping for a section of this run where Ethereum takes the lead, right? I'm still under the belief it will happen. And Ethereum dominance, when that happens, right, when there's a period where Bitcoin's topped out, is chopping, and Ethereum's taking the lead, we're seeing Total 2 ripping, we're seeing Ethereum ripping, same question arises. Are you going to be in Ethereum, which is going to be the safe bet at that point, especially if you accumulate at the lows, right? Or do you rotate out into altcoins? Because then there could be altcoins that are lower market cap that might outperform Ethereum, right? But how do you know which ones are the likely to outperform? Same thing as Bitcoin, we just talked about. This is where you look at your Ethereum pairings, right? So you look at how does your coin measure up against ETH? How is it looking against ETH? If it looks like, if it looks absolutely deathly against ETH, it looks like it's just going to keep making lower lows and lower highs, do you just hold Ethereum? There's no point getting into whatever that shit coin you are trying to get into is, right? You're not going to outperform. But now, just like we looked at the Solana chart, right? If now it looks like, Ethereum, this whatever coin it is looks ready to run against Ethereum, right? It's making double bottoms, it's putting in bullish M shapes against the ETH chart. It looks ready to run. That is when you then consider, okay, even if you don't sell the entire ETH bag, maybe you take some profits off here. Maybe you've done a 2x on ETH. Maybe you take some profits off and then you start going further out the risk curve, right? Now you can take some profits off. Maybe you take your initials out, and with that initial, you can now play with these altcoins that look ready to run against Ethereum. Right, that's how you make strategic bets. You don't just blindly go buy a coin because you think it's going to run without considering all the other factors that you need to consider, and you then wonder, well, why? You're left with your dick in your hands, wondering why has this coin not pumped, right? You need things to line up at the end of the day. You can't just roll the dice and hope, right? Very minuscule 0.0001% of the population can get away with making life-changing money just by rolling the dice, right? Many of us aren't that lucky, right? So ETH dominance, and a live example I can give you guys of this actually is I was looking at this the other day. Okay, if you look at Aptos right now, so if I go back to key alts and their pairings, if you look at Aptos, this is one I noticed the other day. If you look at Aptos against Ethereum, okay, what do you notice? Should be here. Where's it gone? Right, 1 second. I think it's in this one then. If you look at Aptos against Ethereum, what do you notice? Right? Yes, on the higher time frame, if you look at the yearly, this is making there is no structure. This has just been selling off, right? But now if you start considering the yearly candles, right? So for example, you consider how 2024 closed, so on and so forth. What we've done since 2025 opened is we've come down to retest 2024 yearly levels and 2024 6-month yearly levels. Sorry, 6-month bi-yearly levels, right? Biannual levels from 2024. That bottom there. What is that bottom also? XABCD, right? That is again a completed bat. That is a completed M shape. You've gone and you've already had your T1, I believe, but just to be safe, let me check once again. Say for harmonics, if you go from there to there, yeah, actually you haven't had your T1 yet, but you've hit your terminal 1 zone now, right? That's your terminal 1 bar right here. If you follow Scott Carney's teachings, the 382 is your terminal 1. That's your first target, right? We look like we're struggling to get above that for now, so I wouldn't be surprised if we did do something like this. I would love for us to have one more drive down. Doesn't have to be a double bottom. Love for it to be a raid reclaim. Can be a higher low, but I would love for this to have one more drive down, right? Give us the higher time frame, right? Give us the higher time frame. 1 sec. What did I just delete? This. I need to get rid of this as well. Give us the higher time frame type 2 return, right, on the daily. Because that type 2 return is going to be what actually confirms your harmonic, right? So we have accumulation hit. This is not a type 2 return in my opinion, right? You need to hit it. I want to see a T1 being hit and then a macro pullback, not just a range, right? You had consolidation after this hit. So if you do get a type 2 return, and again, you put a double bottom in, rate to reclaim, or a high low, doesn't matter, somewhere around this region. If that comes in, then once again, Aptos against ETH looks absolutely ready to outperform. Right, so then you wouldn't be surprised, especially if you got that again type 2 return. We've heard it with this, right? So let's say we get like a 886, 786, whatever. Even if it's just a 786, right? For me, this would still be a type 2 return. Right? It doesn't have to be exact double bottom. You're coming back to the consolidation range. You would have a M shape taking you back towards the range highs again, right? if you came even lower, you got the raid first, right? So let's say you gave us the raid on the drawdown and then you reclaimed, then you can give us a shark, and in that case you have even higher targets, because then you'd be like, okay, well, we're looking for the 1.13, right? So then you have reason to basically target this 2024 yearly level up at 0.0047, right? Or the next option is, if you actually now go ahead and flip, because what is this? This is very clearly a supply zone. It's a bearish liquidity pocket here. If you go and flip that into support, that'd be a sign that, you know what, we're done with this range. You just be looking for your higher target straight away. But no matter how you look at it, right now, yeah, we're at resistance, so I wouldn't do anything like, in terms of selling all your ETH for Aptos or anything like this based on where we currently are. But if you'd seen this, that would have been a sign, okay, if you're all in on ETH, maybe rotate some into Aptos, right? And we have seen Aptos outperform Ethereum over the last few weeks, right? More than that, this is now also a warning for you to not sell all your ETH for Aptos right now, because now Aptos against ETH is a resistance. Again, if the resistance plays out and this drops, that's going to be a sign that Aptos is going to drop harder than Ethereum, or Ethereum is going to hold value better than Aptos, basically, right? So, you have to be very strategic at where you sell, where you buy, if you are planning to interchange between alts, right? But this is right now a live example of a coin that is very, very, that is putting in a very, very bullish structure against Ethereum, right? Aptos. I'm sure there's others, but this is just one I noticed the other day, so I thought I'd bring it up. And yes, again, I'm very aware of the fact the 12-month looks like hell, but don't forget, Aptos is a coin that has not been tested in a full-blown bull market yet. Okay, this is a fresh coin that came out in the bear market, right? This is not a coin that's been fully tested in a full-blown alt season yet, so these candles can very easily get reversed if we do now see Aptos go 30, 40, $50. If we do get that euphoric alt season, right, and Aptos does hit those targets, right, we're going to see, these higher targets being hit. We just haven't been in a macro environment yet where Aptos had the chance to do that against Ethereum, right? That's it. Many of these coins, even though they look like this, is because they released in the bear market, okay? But that's just an example of a ETH pairing to watch for, right? But let's go back to this. Let me check the chat. Yeah, like I said, nothing burger right now. I'm not sure how the crypto summit's gonna go. I think did the crypto summit, what time is it? Or I think Trump's already signed the Bitcoin strategic reserve thing. That got eaten up straight away. Honestly, I try not to think about news, to be honest, but I can't really help you with that question, because for me, I just do TA first. If you try to consider news as well, it's just gonna be so hard to manage your risk, right? It's just extra things you don't need to consider. At the end of the day, it's like, if the chart gives you, for me, I'm just looking at, right, where are we in the chart? Where are we in terms of a macro perspective? Where is my risk to reward? That's it, right? If the risk to reward is telling me, look, just try for a long, I'll try for the long, right? Just a bit autistic. Yeah, tiny bit. Depends on the day, bro. The lines on the chart, it's my own. I'm finding support resistance, brother. It's my own system. I'm using fibs to denote it, but there's support resistances. Like Walid said. Yo, sup, Walid, brother? Nice to see you here, man. Big respect for you. You're a killer, bro. 6:30 p.m. our time. I think I'll be at my business. So I'll see what happens. I'll put my laptop on the side. Okay, so that's that. Okay, let's speed run totals. Okay, first and foremost, total one. Again, wave structures. We had I put these up way ahead of time, where we topped out in January, right? Somewhere around. These were projected. We had a macro 786, so the 1.272 is your 4-point wave structure, and we also had from ABC we had a 0.5. So the 2.0 extension, which is why I came up with these targets, right? Again, I didn't give you these targets because I knew this is where we were going to top out, right? I gave these targets before we even broke out of this range. All I said simply was, okay, we're breaking out of this range. In terms of wave structures, this is where I target next, right? All you have to do then is wait for the price action to confirm, okay, are you going to take this level seriously or not? Because if you completely smash through, doesn't matter how nice the wave structure is, buyers and sellers haven't acknowledged it, so it doesn't mean anything, right? But sellers did acknowledge it. They tried to get above, they couldn't, and you put a lower high in. That's where you get this sell-off right here. I'm going to turn some of these off so you don't get confused. Turn that off, and turn that off. I'll only leave the levels that really matter on. So right now, as we speak, actually, you know what, let me do this to group 3 there. Let's do it in terms of this now. Let's keep it very simple first, right? What I've done here is mark out 3 distinct support resistances based on yearly closes back in 2021. Okay, so basically what this area here is I'm marking out the area where sellers were in complete control back in 2021. Okay, based on the yearly, sellers were in complete control. And then what we had in 2024 was we came up, went to the mid of the said area, sellers once again established their control, right? Meaning an area where once sellers had their, let's say, base of operations, right? This was, if you're talking king of the hill control points, the sellers were very deeply entrenched in here. It's still an area where sellers were active, is what this price action was telling us, right? So it's not a surprise we chopped down here. But then what did we do? We broke down, right? We reclaimed the area then, right? After the breakdown, we reclaimed the area which is representing the low of the area where sellers were in control, right? We reclaimed that area, meaning that was your first step towards now buyers showing signs of strength in an area where sellers were in control, right? And then you closed above, which you hadn't done yet, right? You hadn't done this yet. You closed above the area that is representing the mid of the area where sellers were in control. After that happened, that's what actually gave you the move up, right? And now, even though there's many people screaming bearish, on a macro perspective, right? You look at this on the monthly, you look at this on the 3 months, you look at this on the 4 months, you look at this on the 6 months, you look at this on the yearly. Can you really sit there and tell me that this is a bearish chart? Right? You absolutely cannot, right? Because literally, look, area where sellers were in complete control on the yearly, right? If you look at the monthly, you have no monthly candle body closes above this area in history, not one, right? All wicks, meaning anytime buyers went here, right? Think about it in terms of buyers versus sellers. If you want to describe price action to yourself, think about this in terms of buyers versus sellers. This is an area on the monthly, right, where sellers were in complete control over the buyers, where supply was vastly greater than demand. We know this because anytime you get here, you get booted straight back down, right? So now, what is this telling us now? Look, we have one then close above this entire area, meaning this candle is insinuating, right? That candle is now insinuating the opposite of what this was telling us in the past, right? This is now insinuating that the supply down here is void, it's been absorbed, right? It's telling us the buyers are in control, but we don't know that for sure until we get confirmation. The confirmation came in last month, right? That monthly candle there, that was a retest into this zone, right? What did you do? Not only did you hold the yearly mid as support, right? Again, an area where sellers were in complete control in the past over the buyers, where supply was way greater than demand. This monthly candle here is now telling us that, in fact, the opposite is now true, right? That buyers are indeed in control of the sellers at this particular area, and that demand is indeed greater than supply at this area now, right? So you have a very, very clean narrative flip right in front of your eyes happening based on that monthly close, right? Now, does this mean that we can't break down? Of course not, right? For example, this monthly candle is for now bearishly backtesting this monthly supply zone, for example, previous all-time highs, right? But we still have 24 days for this monthly close, right? And on a macro scale, even if you drop down to 2.19 trillion, right, it doesn't matter as long as you can hold that and reclaim this, because you are now putting in price action at an area where in previous year you couldn't. In last bull run, 2021 bull run, there was no price action here, right? All there was a 12-month close with a wick telling you that this is the area where sellers shot you out, right? I'm referring to this wick right over here. No candle body closes. But as long as you're chopping within this zone now, on the yearly, you're going to be building price action at an area where sellers were in complete control before. So for me, right, to turn macro bearish, I've said this before, to turn macro bearish, it's not going to be if we lose this, right? I'm going to head some short. I'm already in some shorts, but I'd head some shorts based on, like, any time we're below this, but I won't open any swing shorts. If you did break down and then turn this into resistance, however, right, you did this, right? So let me get rid of these so there's not too many scribbles on the screen. There. If we did break down here and then we turn this into resistance, that is when I'd be like, okay, you're below the area where previously on the monthly that sellers were in complete control. Even on the 3 months, no matter how I look at it, 2 months monthly, you're below the area where sellers were in complete control, right? So if you get below this and do this, you can imagine what this is telling us is you have distributive structure, inverted smiley face, and that is something I'd consider swing shorting, right? But until that happens, this is for me just a bullish back test of the total one chart, right? So just my view on this. Again, I don't care if we wick lower, as long as on the higher time frame, I'm talking triannual closes, right? I'm talking quarterly closes biannual, as long as we can maintain, especially above 2.8 trillion, that's my like sweet zone. Like, as long as we can stay above this, ultimately I'll be looking to base higher for Total One. Hopefully that makes sense, guys. Aptos is US coin. Trump hasn't pumped yet. It's been holding daily level for a month. Slowly. Yeah, Aptos. To be honest, Polkadot's also holding quite nicely, but Aptos has been holding very, very well. Okay, so that's Total One, and let's take a look at Total Two next. Total 2, in my opinion, looks the weakest out of all the totals. Okay, which is why I'd be taking the ETH pairing seriously right now. This is the only one where, if you look, right, Total 1 obviously above everything. I'll show you in a minute. But Total 2 is below key resistance. If you take a look over here, you have your weekly bearish order block, right? Meaning, obviously, this is no longer a valid liquidity pocket. This is something I like to call a mitigated liquidity pocket, right? You're not going to use this because you think there's liquidity there. I simply have mitigated liquidity pockets on for future price action read. Okay, so this is showing an area where sellers were supposed to be in control in the past. That was confirmed here, and this is telling you buyers are taking control of an area where sellers were in control, and then now sellers are back again. It's very useful price action, right? So as long as we're below this area, your weekly order block, your weekly supplies on top of that, and on top of that also you have your 3-month quarterly area where sellers were in control, right? You're below all of that for Total 2, right? So as long as you're below this, you're within this range. And as long as you're within this range, but you're below range high, you're targeting range mid. And if you ever lose range mid, you wouldn't be surprised if you got range low. That's it, right? So for Total 2, I won't be interested until you reclaim this back into support, or you got some sort of raid of the mid and then reclaimed it, right? That, or just get to the low. Where we currently are, I'm not interested in Total whatsoever. Total 2, right? So I've still got my ETH positions from literally the bear market. So like low 1100, 1300 something is my average right now for my spot ETH holding. So I'm not going to add anything to that. Basically, I'm not going to size up until this happens. I don't want to size up at the mid until we get a clean rate at the mid, or until we get a clean rate at the low, or until we confirm we're actually out of this range. It doesn't make sense for me to take risk here, right? So delete that, delete that, delete that, delete that, delete that, delete that. So yeah, Total 2 looks weak in my opinion. Not weak as in like this looks ready to die, but weakest out of all the totals. So yeah, that's that for Total 2. This will look way better above this grey box here. Or if we actually went and raided the lows, that's about it. Total 3 now, we go to the opposite side. This looks way better than Total 2, which is another reason I'm saying to watch for strong ETH pairings, right? Because if Total 2 looks weak but Total 3 looks strong, then logically you're thinking, okay, well, Total 1, right, it includes everything. Total 2 includes everything but Bitcoin. And then Total 3 includes everything but Bitcoin and Ethereum, right? So if Total 3 looks bigger than Total 2, that just means that it looks way more likely that alts are going to catch rotations than Ethereum is, right? As weird as it sounds, because obviously that's against previous market cycles that we've had, right? But literally the same thing, look, as Total 2. Total 3, once again, weekly bearish order block, weekly supply zone, right? Unlike Total 2, Total 3 has flipped all of that into support, right? An area where sellers are supposed to be in control of the buyers, supply is meant to be greater than demand, same thing here, is not the case. This is telling you that buyers are in control of the sellers, demand is greater than supply, right? So as long as this is the case, now I must say alts look better than ETH right now. It's just what it is. Total 3 looks way better than Total 2. So again, this gets voided if you lose this level. You do that, you got distribution, you'd be looking to probably raid the range lows if that were to happen, right? But until that happens, there's no point thinking, oh, what if it happens, right? As long as you're above this, just like I said, just scalp the swing mindset for your alts, right? You have more than enough time to actually build positions at the lows, but you definitely don't want to be fading when the actual flip's happening. What most people do is they ignore things like this, and then once this already pumps up again, then they'll start building positions here. That's the complete wrong thing to do, right? Because then your risk is severely elevated once the move's already happened, right? So, but yeah, Total 3 looks way better than Total 2. Hopefully you guys can see why I'm saying that. We've got others, right? So if you look at others also, it looks better than Total 2 in the sense that at least others is now already at its range lows, right? So you've got this very distinct range from history. You have a BAT that's completed in the past, right? Which is why I've got this wave structure here. accented 1.13. You rejected off the initial 414. So if I was to go ahead and turn this one off, right? Your 707 retracement, 1.414 extension basically, right? You completed the ABCD, which is what you rejected off of. But yeah, now you're back at range lows. If you lose this range, I wouldn't mind a wick towards this yearly level from 2021, right? Down towards 200 billion basically. As long as we reclaim in the future, we're going to go back up at the end of the day, right? For here, it's really simple. If you go and start turning this to resistance, you've got a very easy area to then be like, okay, then we might see 150 billion. But where we currently are, as long as this holds, look at history. Anytime this level is held, it's gone back to range highs, right? So as long as this holds, you're looking for moves up back towards there again. So again, this looks better than Total 2 in the sense it's way easier to actually manage your risk based on this chart, right? Total 2 is just smack bang in the middle of nowhere, which is why I'm saying Total 2 looks the worst right now out of all the different Total charts. But that is Total 2. Sorry, no, this is Total Others, right? Last but not least, a few others to look at. Total DeFi looks absolutely amazing. I love how this looks. We had a completed bat, right? XABCD. There you go. You have an 886. And then the bat gave you your consolidation period, right? Basically, buyers and sellers were let me rephrase that, ignore what I said, feeling each other out, right? And then eventually sellers relented for the buyers, right? That's it. But this looks very, very good, right? So you've hit terminal 2 as well. You've hit both your harmonic targets. Your next target is literally going to be, let's go and take the AC out, basically, right? And then again, I've got a XAB, right? Sorry, ABC, the C's are 886. Therefore, your D is going to be a 1.13. You have a wave structure on the macro taking you up towards 221.36 billion, right? And you know we're going to be able to print more wave structures. So for example, right? For example, if this is the low, let's say that this does become the low, right? From here to here to here, right? We have, let's say, a 618 basically, right? So you'd be looking for a 1.618, which would once again give you another target as to why would we be aiming higher, right? You'd have a wave structure taking you back up at a rate of all-time high. So you're gonna have a nice PRZ up here, basically, something to watch for a rate of previous all-time highs, right? I'm gonna delete that for now because we have not confirmed the bottom yet. But yeah, Total DeFi looks amazing. So again, what does this mean? It means that right now, if you see any DeFi coins that are showing signs of strength, that are at areas where you can easily manage your risk, then it's worth taking a shot. You don't have to go all in straight away. If you watch my YouTube videos, you know how I manage my spot swing entries and leverage swing entries, which is the 20-40-40 rule. You can change the ratios however you want, right? But you can start building backs, right? And then you don't have to go all in. You don't have to go all in until you see signs of strength, right? You can size up. I know people normally like to DCA down. I like to DCA up as well, right? When you confirm trend shift, when you confirm key resistance got flipped to support, size up, right? It's an important skill to be able to DCA down, yes, but it's also an important skill to be able to DCA up, right? Because you want to be building an average before your big impulses comes in, and there's going to be plenty of resistance flips to supports and trend shifts on the lower time frame to higher time frame slowly over time before you get your impulses. So very easy. If you get into any DeFi coins here, if you lose this trend, just cut. Very simple, right? So it's at a place where you can manage. You also have a bullish structure here, right? You have an 881, and I think now we can actually go ahead and say, in fact, this was an 886. There you go, right? So you have a completed bullish bat as well on this structure here. So again, it's like, all the stars align. Add trend, right? You add support. You've got wave structures with you. You've got the trend on your side. You've got key levels with you. Yeah, better above 90.54 billion. At least reclaim this yearly level, because below this it's like straight down here in terms of yearly levels. But above that, this has legs. It's got room to grow, right? That's the point I'm trying to make. That's total. And last but not least, others dominance, right? So I've been telling people a very, very easy way to manage your old positions right now is to look at this chart, okay? Others dominance. This is showing you now the market cap of your altcoins, basically, right? So again, how much of the piece of the pie is owed to altcoins, right? If you look at others dominance, what do we have? We have a completed M shape. You had a Gartley, right? That's your 786. That Gartley gave you a bat. You had the 886 and the 2.618 of the bat, your PRZ right here. And then that bat gave you a butterfly. So you have 3 completed bullish M shapes all occurring at your macro PRZ. Not a single higher time frame loss at this level, right? I've been saying for ages, even when we were back here in September when I released the harmonic setup video, right? Which outperformed it, that did so well since September up until the start of this year. The main thesis I gave you guys for alts was, as long as you're holding this, right? As long as you're holding the trend and you're holding the PRZ here for this Gartley, you can get in alts. You get below this, you cut. Very simple, right? Below this, you don't want to be holding alts, just cut it. Very, very simple. And if you ever reclaim in the future, just get back in again, right? We're at the same area again, and look, I think about how much blood we've had over the last few weeks, right? How much red you've seen, and yet, if you look at the actual others dominance chart, your key level has not been lost. Yes, your wick down. Wicks are normal. I keep saying this. Your closes are important. Your closes have not violated the PRZ whatsoever. Yes, this would look much better if you did something like this, right? But again, this is something you can base your at least initial entries of any alt you're interested in off of, right? You base your entries off of this. You can size up in the future, you know, if you go and reclaim this, for example, right? Just size up according to that, right? But it's very simple, because if you're wrong here, you're wrong at the right place, right? If you're wrong here, you know, you start closing below on like you start turning this to resistance, right? Just cut your alts, because you can always just re-enter again if you reclaim this, right? But if you're wrong here and you close below and you cut, then you have a new complete range to work with, right? You have this entire range to work with. You wouldn't be surprised if you started closing below that, if you know you dropped to 6.47% on this chart. If you lost that, you know, you wouldn't be surprised if you rated 4.61%, right? So you're at the area where, yes, you know, if you look at it in that perspective, it can be scary, but you also know that, you know, this is where you take the play, because this is where you can manage your risk. You can size up very well, right? That'll give you a very good average entry, or if you're wrong, you're going to take minuscule losses. You know where to get out, right? You have a very, very well-defined risk parameter here. If you try to enter once this gets here, it's very hard to manage risk, because resistance is just above you. Even if you went here and came all the way back down here for a retest, as long as this held, it'd be a successful retest, right? So that's something you'd have to account for as well. It becomes so much more stressful trying to manage positions, right? So when everyone is fearful, when the entire market's like, you know, the fear and greed index is very, very fearful, when everyone's talking about just lower and lower and lower and lower, but you see moments like this, it never hurts to actually take a stab, right? Again, below this level, if you turn it to resistance, just get out, because then you have this entire range to work with. You'll get way cheaper alts. But above this, you know, you're literally flipping very key range. This was a very key range in previously. You're flipping that into support, right? So that is total others. And then last but not least, one more thing I like to look at is total 3 against BTC. Now this is showing you how good is total 3 looking against Bitcoin, right? Again, remember total 3 is your altcoins basically, right? Excluding Bitcoin and ETH. So those are your bigger cap altcoins, let's say, right? Your top 100s. And once again, if you take a look, firstly, very, very reactive zone here, right? Extremely, extremely reactive zone. Very key support resistance, more than just a reactive zone, right? And what you're doing here is you've once again come in and put in very bullish wave structures, right? You have your BAT, firstly, X, A, B, C, D, right? There's your BAT, your PRZ between the 2.618 and the 886 is right there. And then this wick down over here, this liquidity rate gave you a 618 and a 1.618, right? This was just shy of a 618, but this is a ABCD that's reminiscent of a 618, 1.618, right? And then once that 4-point wave structure was hit, you came up, reconfirmed your PRZ, reconfirmed your PRZ again, and now you're flipping that key level into support, i.e. above this level, you're looking for total 3 against Bitcoin to go towards 0.55. Above that, if you flip into support on the macro, you're looking for 0.73. Above that, 1.03, so on and so forth, right? Your targets get higher and higher and higher. It's just, I'm literally just putting out macro ranges. That's all I'm doing. You can see if you reclaim this level, you know, you wouldn't be shocked to get towards 0.73, right? If you get off that, you wouldn't be shocked to get to 1.03. That's simply historical price action, right? Meaning total 3 would outperform Bitcoin. Again, that is, you know, that's early signs of your alt season, right? If total 3 is going to outperform Bitcoin, that means the indice that is showing you the market cap of your cryptos without BTC and ETH is going to outperform BTC. That's very indicative of where the money flow is going to go towards, right? Then you just look at coins in the top 100 whatsoever, right? So for me, XRP, Sol, AVAX, Aptos, so on and so forth, right? Look at these coins, and then you just, you know, strategically manage your positions on them based on that, right? But total 3 against Bitcoin also at areas where you can very, very easily manage your risk. So all of these, right, if you lose these key levels, they're going to fall very, very hard. Also going to be way cheaper than people think. But you got to ask yourself, are we going to get also those dirt cheap prices, right? Because if we don't, then this is the place where you pull the trigger, i.e. this is where it makes the sense the most to start pulling the trigger. Again, you don't have to go all in at once, right? Build your position over time for higher time frame plays. But, you know, when you start pulling the trigger at places like this, it becomes much easier once trend does shift for you to size up, right? And your average is still going to be in the green. All of a sudden, you're risk-free on your trades. It becomes much easier to manage, right? If you're scrambling for positions once this has happened, many things are going to be off the lows already. It's going to be so much harder for you to manage your positions, right? So that is total 3 against Bitcoin. So that is all the macro indications. So of course, aside from this, there's Bitcoin and needs CMEs as well, right? We filled the CME gaps, no point looking at that right now. And one more thing I do like to look at is Bitcoin against gold, simply because we know gold's been making highs after highs after highs. I just like to look at this to give myself an extra indication of, okay, why might money flow into Bitcoin, right? In this case, we're comparing Bitcoin against gold. So we're looking at, okay, when is Bitcoin going to start performing gold? I.e., people might sell off gold and then get into Bitcoin instead, right? And that's useful. This is just useful for interchanging between those two. But those are, I know this was a bit long-winded, but those are all the macro indicator charts that I wanted to go over with you guys today. Okay, you take all of these into account, right? And then you have a very clear idea. First and foremost, should you be risk on or should you be risk off? Before you even think about trading, if you haven't answered that question to yourself, you're doing yourself a disservice. If you're in a risk off environment and you're throwing bags after bags after bags in because you think this is the low, then you're not doing it right, right? And looking at Dixie USDT dominance does give you a very good indication of, are you risk on or you risk off? And then you start going on, okay, specific with crypto, okay, I'm risk on. Should I be in Bitcoin? Should I be in ETH? Should I be in altcoins, right? Do I see money rotating into any of these, right? What is showing me strength? What should I trade? If I'm going to be in Bitcoin, which alts do I sell off? If I'm going to be in alts, right, which alts should I go into? All of these questions you need to ask yourself before you even think about opening a position, right? You use these to base yourself. You think of yourself like a sailor. If you're a sailor, right, you're not going to go out into the open ocean without a compass, without a telescope, without a way to actually direct yourself, right? The way I see it, this is like a compass for us as traders, right? We're using this to actually guide ourselves through the market, right? We're using TA and using this to guide ourselves. The rest is just actual trading, right? This is actually prepping yourself for the trade. So, sorry, that was a bit long-winded. Let me go back to the chat. No problem. Trump and many R coins. Okay. Let's look at Bitcoin next then. We'll look at some alts and Bitcoin. So let's begin with Bitcoin. So first and foremost, you guys know what I think about Bitcoin already. Above this level, we're fine. Okay. I want us to be holding, let's see, what's the mid here? Let me just zoom in. I want us to be holding, let's say, around like 89k, right? 89,100 and something. Let me just quickly get a better resolution on this. I should use fibs for this, but I don't want too many fib lines on my screen. Okay, so basically around 89,175, right? That's the line in the sand for me right now. As long as we're above this, you can look for moves back up towards range highs. As long as you're below this, eventually I think you get a drag down towards this key inflection area. My own system. But basically between 73k to 64k, as long as we're below that level I just said, right? 88, sorry, what was it, 89 something? Jesus Christ. I'll put it down, I'll mark it down, but 89,175 I believe what we said this was. Yeah, around 89,175, right? As long as we keep using this as resistance, eventually I do think we go and tag this between 73 to 64. That would not be bearish whatsoever. In fact, that'd be a very early flip of previous all-time highs into support, right? Again, what was once resistance flipping to support, you'd be looking for moves higher. I would not want us to go lower than 62k. Okay, that's the lowest I'd want us to tag. I would not want us to go lower than that, and even then I would want that to be wicks that was very immediately bought up and us to reclaim around 68k. I don't want any extended time below 68k if we do go to this area. Okay, so that's that for BTC. Now, what was the perspective I was given before, right? And this is why I was saying, nothing much is happening, don't take any big commitment plays over here. We know that one big thing this was doing was here, and there's one more right there. Okay, if you take the diagonals from your previous consolidation range, right? So this is from this high to this low, and then you extend the said consolidation range, you're going to get your golden pocket plus liquidity rate in my own system between here and here. Right, so all we were doing, and this is something I mentioned in my YouTube videos a lot, all we've been doing since we've come into this range is just chopping in between the golden pockets plus liquidity rates of the fib speed resistance fans based off your previous consolidation structure, right? So what I said was until you go and actually get out of either one of these scenarios, right? Until you go and get out one of these scenarios, you have no clean break of structure, right? So what we got here now was we got the sellers taking control. They tried to hold, they couldn't. You kept turning the liquidity rate into resistance, and then you broke down. So that pump up that happened, this was a scenario we described in a couple of YouTube videos back that I released, right? So a lot of plays got filled in this. I had actually, wait, hang on, I think I have here, yeah. So these were plays that I described. So we got the weekly fair value gap over, sorry, daily fair value gap over here. The mid of that is what got filled. If I turn this on, no, where's it gone? Here, right? The mid of the daily fair value gap, that is what got filled. And that is what gave us that move up. But now, until we go and reclaim this, I don't particularly see this. What I said was I didn't see this move up as bullish, right? Which is why I released that YouTube video when the pump happened saying I'm going short Bitcoin here, right? I said in that video, I'm going short Bitcoin here as a scalp, right? Scalp the swing, but taking profits and then going short on this. The reason for this now is because in terms of diagonals, right? It doesn't matter. It's very, I think diagonals is very, very slept on, right? Extremely, extremely slept on. Diagonals are going to give you a perspective on the market that you're just not going to get anywhere else, right? Because with diagonals, you're not just getting key levels, you're also getting key levels with a gradient. You're getting key levels with historic price action. You're getting key levels with trend over time also built into it, right? So in terms of horizontal levels, like if I turn on my 12-month buy-seller zones, right? Where's it gone? Where's it there? If I turn on the 12-month buy-seller zones, the other thing we were chopping in between is the 2024 12-month levels, right? Once we lost it, what we did do here was we closed above that 2024 12-month seller zone low, right? 93,466, very important level we closed above. If you were looking at this simply in terms of a horizontal perspective without the diagonals, you would have been over the moon. You'd have been like, yes, range is reclaimed, we're back. But if you have your diagonals on, you would realize all you did, what was one support, right? What was one support has simply been bearishly back tested. Right, you just extended past a bit because by this time your diagonal was slightly higher than where your horizontal was. That's it. Right, so until we go and reclaim this, if you keep using this as resistance, ultimately I'm looking for that move down. So like I said, the time frame I've got right now is 2025. So by the time April starts, right, basically plus or minus a week, right, plus or minus a week, end of March, start of April, there's this period where we have a key, this key diagonal intersecting with this key horizontal, right? I call this an intersection. I want us to be above that price point by the time this rolls around, because if that happens, then any pullbacks we get, we'll be using this as support again. We'll be back within trend, right? The gradient that is outlined for us is going to be used back as support, right? And this is going to be a bullish reclaim / back test. At the moment it's important, right? This is basically you're scoring a price against time. I'm just using geometry to my advantage, right? That's what I'm doing. But this is going to be support with the backing of the lines, right? And then you'd be looking for, moves higher, expand upwards. We've got way more diagonals. But if we're not, and we below this level by the time we get here, right? So let's say, by the time we get to this area, we use this resistance. All we've done is bearishly, once again, back tested your diagonals. You've said that there isn't enough buying pressure to reclaim what is demanded of us to stay bullish. And now you've treated this as resistance with the backing of your diagonals, right? This is something I would seriously consider building a swing short off of, because for me, that would just be bearish. Right? If we bounce up before we go down, this is what I'm looking for. If this happens, I think we then get the delayed drop into that lower level, and then you'd be looking for that move up, right? But for me, that's the line, the plus or minus a week. But start of April, end of March, that's my time frame for when I want us to be above this level if you are to be bullish. Of course, you've got other time frames as well, right? For example, you've got start of May as well. If this misses, then your next target is happening basically end of April, start of May. You've got other targets. But for now, the closest target to us that's viable is this one. So I'm going to be basing everything off this one. Hopefully that makes sense. But just incorporating diagonals as well, right? Because I know not many people trade with diagonals. So diagonals is very, very important. Fib channels, pitch fans, fib speed resistance fans, fib circles. You can use anything you want. Spirals. I mainly use fib speed resistance fans, pitch fans, and then fib channels for my diagonals, right? I think circles and especially spirals, they're too arbitrary, right? If someone else can't do what you're doing, you're looking at that yourself, right? So that's not strong TA. I see loads of abstract TA out there where it's like only one person in the world can draw this down. Well, if you're the only person that can see this on the chart, what makes you think it's significant, right? Because if you're the only person that can see it, then that means that the rest of the people looking at the chart aren't looking at it from your perspective. So that actually decreases the thesis for why it should be a key level, right? But diagonals like fib resistance fans, pitch fans, fib channels, right? Pitchforks, they're very, very easy to use, right? Many people would have a very, very easy time using them. Therefore, I take those more seriously than like fib spirals or anything like this. I'm not saying like you can't use fib spirals or anything. I'm just saying personally, I think those are like there's levels to it, right? I think these are way more practical to use, let's say. So that's BTC, i.e. below 87k, don't do anything. In fact, if you start getting lower time frame flips of this back into resistance, you can see support, like you start seeing shit like this, right? You break down and you start seeing SFPs. You can take a very, very nicely hedged shorts once again, right? Again, scalp to swing, so risk to reward of 3 minimum for me. I'll take my initial TP somewhere over there, put your stop loss to break even, and then if you once again lose your lower time frame structure, right? Just literally, that's it. I'll be looking for rate all of these highs, just take it down. That's what I look for on Bitcoin. So let's look at, let me go back to looking at that. Are we selling off? I mean, some big buys coming in, but it's just not enough, right? This is on the lower time frame, but in terms of structure, below this, you want some big buys coming in to reclaim. It's not happening yet. Way more sellers than buyers. Okay, let me check back to the chat. Okay, so let's look at ETH, ETH USDT. So in terms of key levels for Ethereum, this one. In terms of aura, Ethereum is a very, very important level. As you can see, historic resistance, support, support, resistance, resistance, support, support. You're at support again. This is the same area where I entered my swing long up to this level back in September, right? So when I released my September harmonic setup video, I was telling people, look, this is a good place to get into ETH. Same area again. As long as you're above 2,150, you're fine. I don't want to start closing below that. If you start closing below this, I'll be looking to turn this level into resistance. And if that happens, honestly, I think 1,500 ETH is in the cards. If you lose 1,500, you're going to get this, unfortunately, right? That's why this is so important to hold. If you do hold it and you get another weekly close like this though, you can very easily do something like this, right? And this time around, I would think these get taken out, so I'll just do something like that. At least to the historical price range for mid. Something like this, based on the weekly close. You can do this based off like any daily closes you get above here as well. On the daily, that looks pretty good in the sense that if you go to the 4 hours, this is what we call a smiley face being put in. So, you can start your position here. That's the thing. You can start your initials, right? 20%, 30%, whatever your allocation is. And then you can size up once the trend shifts, right? So this is a very good place to actually get your initial bids down if you're trying to get into Ethereum, right? Just because if you're wrong here, again, risk management is super, super easy. In fact, on the lower time frame, you don't even need to go for this. If you go for that 4 hour one, like I was just saying, you just cut if you start losing that 2150 level that we're closing below, right there. But Ethereum at the range lows, could we get like some sort of massive AMD? Maybe, right? Maybe, who knows? But until it happens, I'm not going to sit there praying for it, right? I'm not going to say, yeah, we're going to get that 1,500 for sure. We just need to turn 2150 to resistance if you want to get that 1,500 level. That's it. Very, very simple on Ethereum. And this is what I mean, right? You're at areas where, yes, it looks nasty. Yes, it's scary to buy when no one's talking about shit, right? But in terms of TA, if not here, then where? Because, again, when I released the harmonic setup video, I told people like no one's gonna bid when all these M shapes are completing, right? That's what's happening. People are going to once T2 hits and like everything's popped off 100, 200%. That's when people are gonna ask me for bids, and the same thing happened, right? People are asking me for entries on January, like end of December, but the entries were given the start of September. That's when everything was at the actual areas where risk could be managed. I'm not going to give entries once something pumped at an area where I'm not going to enter. That's be disingenuous of me, right? Just giving an entry for the sake of giving an entry it's not right to do, right? So these are the areas where even if you're wrong, this is where you take the risk, right? That's what you got to understand about trading. It's not about are you going to be right or not. It's about if you're wrong, how wrong are you going to be? If you're wrong, you enter here and you're wrong, you're going to be wrong by potentially 31%, right? Because you could easily fall back to this zone. That is nasty. But if you're wrong here, especially if you take that lower time frame, like I was just talking about, right? That 2,100, this local structure. If you're wrong here, you're wrong by 4%. And you're not even going all in. Right, so these are the areas where you start managing your risk, you start managing your positions, you're building up over time. Don't go all in until trend shifts, so on and so forth. Very basic stuff. And over the long term, you just repeat that risk to reward. Unless you have a system that is actually dog shit, profitability is inevitable over the long periods of time. You just need discipline. That's it. Right? But yeah, Ethereum very, very manageable. Let's look at Solana. Next, this was something I gave in my own server for Solana as a scalp, not really played out yet. This was a swing setup. Scalp was more around the yearly level itself, right? So again, this is a play that I entered personally in that dump, right? So what I mentioned in that video, what I had mentioned in the video before I went MIA for my birthday and so on and so forth last week was if this key level here is lost, right? We have a cluster of yearly level, especially 2021 yearly level is lost, which is lining up with this trend line. The only next area you do have is down over here, right? So 133 and 126. We filled the 126, right, really, really nicely. So again, this is a key level from the end of 2023 and 2024, right? So by the time 2023 and 2024 closed, those two yearlies together, mixing together, is what gave this particular level at 126.15. That is where you went to. That is what you put your smiley face off of, right? You're putting a higher time frame smiley face in right now. So as long as this holds, again, I'd look for higher up in Solana. So from that move, you went up to reject at that particular level, right? So again, this was something I entered. I did an update in my YouTube video, but yeah, again, Solana, another one. As long as this holds, you're holding range lows, you're holding yearly levels. It's easy to manage risk, right? So let's go over here. If you're not already in, you might as well just wait for weekly close, to be honest. But if you do enter on the daily, risk management, again, super easy, right? I just put it below this. Look, you don't want to start closing below this area. That's it. If you close below 126.15, you are going to go $100 / less on Solana. Right, so you have your line in the sand. It's this zone right over here. If that is lost, you're going to go lower. So this needs to hold, right? But as long as this holds, you're looking for, again, moves straight back to the upside because you're in this range. You're looking for moves back up towards this upside. And again, if you do get a wick below, I'm looking for something like this, right? Maybe give us the 618, and then if we get the 618, we're going to be getting the 1.618 for the extension there. So even if we do go a bit lower, right, and we get that liquidity rate to the 618, right, we'll be looking towards the 1.618, which is around $400 sol, right? So again, there's targets. We just need to base here. That's it. If you lose this and you go down here, you're looking for the 707, 786, and the 886, so on and so forth. And I hope we don't get those deep value levels, because as amazing as it would be to buy those, your trend, everything is just going to be out the window. Structure all out the window, right? And it's going to take a lot to build that back up again. So I'm hoping for like a 618, right? Liquidity rate, reclaim this range and just send. That's what I'm hoping for. But we'll see what we get. Even if we don't go a bit lower, this is close enough, in my opinion, to actually say treat it as a 618, if I'm not mistaken. Yeah, 591. That's close enough to be called a 618, right? So this area between where we bottomed out for now and the 618 is what I really, really want to hold on this chart. There we go. So that's Solana. Let's look at Aptos next, since that's holding so well, right? Aptos looks absolutely amazing. There we go. So again, yearly level for Aptos is the main reason you keep rejecting off this level. What I've told people is just don't get into Aptos unless you come back down to this range, and or until you flip this, right? That's the simple thing to do, because below this, at the end of the day, you're below yearly levels. But what Aptos is doing is you have a completed bat and you have a completed shark, right? So your shark, your bat, no matter how you draw this wave structure, you have 886s being hit, and that is solely what is being used to support by Aptos down in this area. right? So the 0.5 of the area where buyers were in control is still an area where buyers are in control. Yes, the yearly is being resistance. Yes, you know, you've got bearish order block, but that just means when you flip that in the future, it's going to be so significant. That's what I'd look for to target, you know, $8, $9, and then higher even, so on and so forth, right? Aptos, very, very simple. I don't need to spend long explaining this whatsoever. Very, very clear and well-defined levels on this coin. Again, this filled for me in the dump, right? When I was away, this filled in that, like, you know, dump down we had a Bitcoin to 79k. And, you know, I'm just scalping based off that, right? For my spot bags, you know, they're even lower. So no worries about being stopped out there for now until we actually lose this structure. Same with my swing. But Aptos down here, you know, just look at it, right? So firstly, range lows on the macro. Secondly, completed wave structures on the macro. Exact same thing I was saying when we had completed wave structures previous last time around, right? We just need follow through. That's it. Now we don't know when the follow through is going to be. All we can do is be prepared, you know, have some bags ready at least so we can size up once trend shifts, so on and so forth. You don't want to be scrambling for positions, because by that point, like, risk management just becomes more and more difficult, like I keep saying. So Aptos, if you're not in already, I would definitely wouldn't get in over here. I'd do that. I'd wait for that flip of, you know, support, resistance into support, sorry, plus order block, and that's what I'd use to go higher on Aptos. Does that make sense? Let's delete this. Okay, so that's Aptos. We've done Aptos. Let's do AVAX. AVAX I'm not interested in terms of a leverage play below 2120. No, we had a lot of M shapes here. We had 886, right? We had ABCD, but under the ABCD, but under the 886, we're just below the entire thing right now, right? So this rounding structure, one of two things: either this rounding structure is just going to get violently taken out, in which case I will add after the high low comes in, right? Or I'll wait for the reclaim of these yearly levels here, right? But last time, you know, I saw something like this was in Ethereum, and you got a big dump before you got the reclaim. So below the 2120 level, I'm in a hedge AVAX short. I've got spots, of course, but I've got a hedge short open as well. Just scalps, right? Just scalp for hedges. I've got a hedge AVAX short open just in case we do go down and tag that $17 level. Again, you know, as long as we didn't lose that level, I think all would be fine. This is still a part of a massive type 2 for me, this wave structure that is currently going on. If we look at AVAX, in fact, if I go to, did I see anything interesting on this? If you look at AVAX against BTC, it looks like trash, right? This is right now is telling you that yes, you know, it's much better for you to be in BTC rather than AVAX. There is no key level. In fact, I think what you might have, losing the mid. In terms of the AVAX against BTC chart, this is telling you very clearly that, you know, values in Bitcoin compared to AVAX right now, right? And that would remain the case in my opinion until on the macro you went and reclaimed this, because then at least you have an argument to make to go towards T2 and stuff, right? You have a reclaim of a wave structure. So let's see what we get. But AVAX against BTC, not looking good. If you were to ask me BTC or AVAX, I'll just, without hesitation right now, say BTC. But AVAX against ETH, that is something else entirely, right? So once again, AVAX against ETH, there are M shapes, but it's the ratios are a bit messed up, right? But what we do have is extremely clean ABCD that has hit over here. So if you take a look, what you had over here was a 707 on the retracement, and the reciprocal ratio for the 707 is the 1.414, right? So pretty much perfect, straight back down to 2023/2024 levels yearly, and then you're just flipping your yearly levels. Right now, you're trying to reclaim your 2024 and 2022 yearly level zone right here. So again, if that is successful, I'll look for moves up back here again, right? But AVAX against ETH, in my opinion, is trying to put in a sign of strength here, some sort of macro smiley face as well. If it can succeed, then we have, you know, arguments to be made for 0.505. Sorry, 0.5. I'm just going to pin this to 0.5. I like to go to the actual ratio itself. So the 0.5 is right here, meaning that 786. There you go. Right, look, the 0.5 is there. you have a 786 retracement right there, meaning you wouldn't be surprised. I'd say this is a potential bad, not a bad confirmed or anything, but this is a potential, I repeat, potential, all caps, in the making, right? Now, of course, the probability of this increases vastly should we ever go and turn that B point into support, in which case we would trigger something called a bat action magnetic move, a BAM. Then you'd be looking for that, PRZ to get hit up over there. But this could be the makings. This could be the start. If we lose this, then down to the 886, it would still be valid. But for now, very, very nice area for AVAX against ETH to bottom out. So again, you now have Aptos and you have AVAX, right? Which are two coins that look like, if you wanted to allocate some of your portfolio, maybe you're really heavy into ETH, right? And you wanted to you want to go a bit further out on the risk curve on your portfolio. Two alts right now, AVAX and ETH, right? That you can manage your risks on very well compared to ETH, right? AVAX and Aptos. So that's AVAX against ETH. Just comparing it because obviously we're looking at the actual AVAX itself. So that's AVAX, right? Another one to look at is SEI. This one is looking very, very interesting just because of where it is, right? Very, very deep value areas. Now, this is going to look much better. It's going to look much, much better above that grey box, okay? Above this grey box, this will look absolutely amazing. The grey box is literally where your previous accumulation came in. Again, based off my September entries, this is why we caught this big move up. Until I said, okay, we've got a bearish shark, right? Take some profits, we might go back down, right? But even here where we are, there's 2024 yearly levels. You have previous bullish order blocks, right, being respected. As long as this is held, right, and I'm open on SEI down towards 0.1752 because we have a macro shark 886 down at 0.1752. I don't like SEI below that level, right? Below that, I wouldn't want any of this. But over here, I'm completely happy building exposure to SEI. Because I know, you have a macro 886 if you do that, right? So just your 1.13, that's going to be taking you back up towards 1.26, and it's not just one. You have two different wave structures. You have this 886 over here as well. This is just the raid reclaim higher, right? You have two different 886s. You have a completed M shape over here, right? So you can see you have a bullish bat, and yes, you're below it for now. But remember, look, this is for now. It's just consolidating. You can very easily consolidate, reclaim, and send higher, right? So this harmonic is still in play. 886 plus 2.618 at that, right? I'm sure there's other ABCDs over here I can put down as well, right? But this is also, you can think of this as a massive type 2 to your already completed bat that I pointed out back in September 2024, right? Our September harmonic entries. So no matter how you look at it, SEI, at areas where you can manage your position really well and manage your risks really well, and as long as these aren't voided and you survive the chop, ultimately once this does move back to the upside, you have very, very high targets for this. You're talking like 450%, right? Ultimately, if you were to go rate the highs. Now, of course, it might not get that high. It might just do this. It might not get to this high. It might go higher. We don't know, right? But as a trade entry perspective for spot, you enter that, you don't have to worry about it in spot. It doesn't matter how high you go. You just hold until distributive structure comes in at the top. Then you just sell, right? So SEI is another one to watch, right? SEI looks very, very good. SUI, I really wanted that 886. We might still get it, maybe, but again, you're bouncing off. This is yearly levels on the left, and then now volume-based support resistance levels on the right. So this is your, if you take the, hang on, let me show it like this. Not the macro, not this, not this. It's this. Yeah. So if you were to take the if you want to take the fixed range volume profile for the original range, right, all I'm doing is marking out the different standard deviations for the said range, right? So standard deviation 1, standard deviation 2, so on and so forth. Standard deviation 3. So you have significant levels based on volume, right, based on fixed range volume profile, and all of these that are marked out are from volume based, right, on the right that you see, or in the middle, and on the left are your yearly levels, right, just like before. We've tapped a yearly level, we've tapped a different standard deviation value area highs for different ranges in terms of fixed range volume profiles. So if you hold this, we might not even get the 886, right? But maybe if we get one more flush today, maybe we do go down and get the 886 rated reclaim. But again, SUI is another one. Look, is previous resistance is being flipped to support. Now, I would not be opposed, like I said, to one more drop. But even if we don't get it, this was an area where I was completely happy having some exposure, which is why my initial positions were open down over here now. Right. So again, SUI is one where I do have, for my spot, I do have positions open based on this. Right. So where's it gone? this, right? So this was the one we went over again in September. Harmonic entries. You had a ABCD. You had your macro M shapes all lining up in this area. So we entered down over here, right, on SWE. If you watched my YouTube videos back then, we got a really nice pump up from that area. Now I'm just looking to size up and also looking for leverage plays, right? Because I obviously took some profits on here, so I just want a macro indication before I size up now, before I ruin my average. So just waiting for that patiently, and then also scalp to swing mindset for altcoins right now in this environment. I have a SWE another one to watch. So the ones I'm going over here mainly are the main altcoins in my opinion that look good, right? Of course, there's going to be loads of alts. These are just ones I'm focusing on. Ondo, another great one. I gave this hedge in the last YouTube video I released, because that was a stream I did in my own server, right? And then I just released the video. But I did give this hedge short on Ondo, which is up right now. That was based off this right over here back then, right, 3rd of March. So this was a nice hedge. We have a Gartley on Ondo, right? It's not completed yet, a bit lower for the 786, but it's pretty much hit, right? So we have a Gartley, we have an M shape, and if you lose that, we have multiple different, we have a shark, we have a bat, and we also have a ABCD 2.618 off the 382, right? So we have a massive PRZ for Ondo down at this particular area here. Look, massive PRZ. So again, this is an area where I'm scalp to swing mindset because of the fact it's a key areas, but I'm also aware that trend is still down, nothing's changed, we're at resistance, so I'm aware that we could definitely grind lower, right? I'll show you guys the results of the fills that happen. I'm not going to just say, you know, I'm in it without showing results, so I'll show it in a minute. These Ondo, again, you know, a bit deeper would be perfect, but again, if you do get back towards this area, this would be the area where I'd be very interested in. Or rather, if I wasn't in Ondo, I'm personally in Ondo since this, right? Since like 20 cents. That's where I bought my spot bag. So I need to size up because I've definitely taken profits, but I don't want to ruin the average for no reason, right? That's the point. So before I size up now, because I didn't size up at any point yet, because you know, there was no macro weakness up until here, right? So if I want to size up and bring this average up, I want to make sure I'm sizing up at an area where if I was completely out of the position, opening a fresh position, I'd enter there, right? So I want the same mindset. I'm not just going to size up and get comfortable because my average is currently at 20 cents, right? I'm going to size up only when it seems like, you know, I've got the luxury to at least wait for trend shifts, so on and so forth. So I'm going to wait. But down here would be an absolutely amazing area to watch for a bottoming structure to come in. Check back in towards basically the mid of the range, right? Check back to 2024 yearly level, right? That's your next yearly level below this one. And as long as that holds, you'd be looking for that reclaim and send back up. I think Ondo does amazing. I think it doubles from previous all-time highs, with $5, $6, whatever, right? Looks for the targets based on log. But yeah, Ondo looks good. Ondo's another one. All of these basically, right, also I'd actually consider. Hype, at 1549, below this level, if you get below 1549, I'd be looking at 1328. Below 1328, I would see nothing, absolutely nothing, down until 6.28 basically, right? Below 13, you genuinely don't have any other levels to go for. So I'd just look for the 886, either the 886, or I wouldn't be in anything until your key level started to get reclaimed. Right? So, you know, if this level holds, we do have a 618, right? Here we go. We do have a 618 if this level holds. And that 618 is going to obviously send us to a 1.618 up top. So again, we have a wave structure. In the case, and I'm going to say it right now, in the unlikely case that the bottom comes in where we currently are. There we go. Lock that in place. Right, so if the bottom comes in where we currently are, then, you know, we have a wave structure taking us back to the upside. But if it doesn't, you have one line in the sand below you, which is at $13. Yeah, below that, you know, 1328. Below that, I'll just wait for the 886 at like 6.28 for hype. I do think this will do well, but you know, Trump holding key level still, to be honest, right? So your key level here, your monthly key level, because obviously this is not that old, so I can't put yearly levels down. But your monthly key level at 12.827 is what you basically keep trying to close above. Your buyer zone down over here is holding for now. The mid keeps being respected. We could see that, but you know, I wouldn't be surprised if you went and flush those wicks. If those wicks were to get flushed, I want to see that 886 being tapped. 886 is at $10.22. Okay, again, it's a valid 886. It might look dodgy because of this, but that is a XAB to a 0.5, C to a 0.634, and then your D, right? 2.216, 0.886. That is a bat. Okay, so I'd want that 886 there to hold, something like this. And then you build your initial positions if it holds and buys, take control here, and then size up once these gets reclaimed, and then size up finally one last final time after trend shifts, and then you just hold with a really good average, right? This reminds me a bit of what Pepe was doing when it first came out, because Pepe put in a harmonic and then it absolutely ran, right? I'm not saying Trump's going to do the same. For all we know, this might just die, but Trump's in office for at least 4 years, right? Now, who knows what crazy shit's going to happen over the next 4 years even. So I want you guys to expand your horizon, and if Trump does something like, like that's really, really good, let's say, or that the majority of the population agrees with, I don't see why, this wouldn't pump as a result of that, right? At the end of the day, this is official Trump. So, yes, it's reliant on external factors, but we can still use TA to mitigate our risk and entries. So let's look at Doge next. Doge is another one that I really, really like. I've got two distinct zones for Doge. You can think of it as one big zone, but if you think of it as one big zone, it becomes really hard to manage your risk. That's why I've split it off into two, right? So the first zone is between 0.21 to 0.19 cents, basically, right? The numbers are here on the left. If these holds a support, right, I'm looking for higher, right? Because again, look, resistance in the past, support in the past, and then resistance again, flip to support, that is a SR flip, right? If you lose 0.19, then I have another zone between 0.16 to 0.14, because like I said, this is originally a big zone, right? Because once again, support in the past, support in the past, support in the past, resistance, 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 back to support, back to resistance. This would be a flip back to support, and then look for higher. So basically, as long as we are above 0.14254 on Doge is a bid. And yes, I do want to bag a Doge. We literally have a government entity called Doge. Elon is in office, right? Again, it writes itself. I don't need to explain why having Doge exposure is a good idea for this. If you do believe there's going to be a proper Ultron, Doge, this should definitely be in your radar, right? So again, trend is on the higher time frames, obviously to the upside. So Doge, you can definitely put down I'm sure there's like a bat you could try and predict from here, right? So if you did this, for example, up to this, down to this, that's the 0.5. I'm sure there's a bat you could try and predict like that. So maybe you wick down to this area if shit gets really nasty, locally speaking. But no matter the case, on the higher time frame, right, your entry models and your thesis is based around, do you flip these zones? Let's say you get the raid, you reclaim, you start your bag, right? Reclaim this, you size up some more. Once the trend shifts, you do your final allocation. You've got a really nice average, put your stop loss to break even, and then just run it up. But that's Doge. Last but not least, an AI play I'm watching is PAL, right? Again, you have a M shape, you have a bat that completed. Again, September entries were for this very reason. The bat went into the 3-day demand zone. We got a really nice pump up. We hit terminal 1 plus, I think, the 0.5, and then we're coming back down. So this is just a type 2 return, right? So again, as long as something like this were to occur, as long as we reclaim the 86 at some point, it's going to be a successful type 2 return, and I'm looking to write this up higher. This 86 for now isn't valid, so I'm going to delete that, right? But this bullish type 2 return for PAL at the end of the day, again, this is an AI play for me, right? That's the reason I got this. But we still have T2 and final bat target for the original, and if you get above that, again, new highs for this coin from where we currently are to even just T2. Again, it's 400%. If you were to go and rate previous all-time highs, you'd be looking at about 650% increase in price. Now, of course, if you get into coins like this, you're going further and further and further out from the risk curve. Okay, so you position accordingly, you manage your risk accordingly. You look at total 1, total 2, total 3. You look at ETH pairings, BTC pairings before you make that judgment for yourself, right? I'm just telling you what I've done with myself. And yes, I do want an allocation of this. I have an allocation of this on MEXC. But that is PAL. And a few more I want to go over is, first and foremost, LDO, right? LDO was looking absolutely amazing above this level, right? It's very obvious why. We lost it. It's fine. It's what it is. If you lost it, I'm looking for this zone right down over here on LDO. I'm not interested where we currently are. We either get this, and I'll do my entries based around this, or we come and get this, right? For me, this particular area here is kind of the middle of nowhere, right? Yes, you've got some support here, but in terms of wave structure, I'm going to trust in the wave structures more. There is an 886 down there, right? So I don't care, if I have to size up a bit higher, I'll just wait for the reclaim if we don't get this 886, right? But we do have a very nice bat structure now here, taking you down towards this demand zone. That's what this is. right? We have a very nice wave structure taking us down here. So if LDO was to do something like this, right, that's what I add on right over there. Very simple for LDO. That's all I wanted to say. Key levels haven't been hit yet, so either reclaim or you go down, right? And you could try for lower time frame entries around this level, but for me, if the 86 is just below, I feel like if now some nasty news comes in, we can definitely wick there, right? You can try for lower time frame scalp to swing mindset trades off here, but even the daily trend is obviously, you can see, it's still lower highs and lower lows, so there's a very high chance we do go and get that 886 at least, which is the whole reason I'm waiting for it right now. So that's LDO. OP, if you wanted to look at this one, another one that's macro shark. There you go, X A B C D, right? There's your macro shark. 886 is hit for the shark. You're also holding yearly level. So in fact, if you actually wanted to get into some OP, you do so like this, okay? Below 0.789 for stops, right? Below that, you get below that, you just get out. Below this for stops, are you just looking for a play like that, really? Even if you don't go back to these highs again, let's say, even to rate these, right? Let's say just between here somewhere, it's a good RR trade, right? In terms of area, and it's very simple because if you enter spot here, right? Again, you don't have to enter all in. If you enter spot here, as soon as you start to see even hourly or 4-hour closes below, you can proactively close your position out. And if you have a reclaim, just get back in, right? You're going to lose nothing for spot. You have no funding fees for spot, so you can do that for spot. Areas like this are a godsend, in all honesty. But OP is another very nice one to actually watch. Not because the chart looks like it's about to break records, but because it's very easy to manage risk at the areas we're at. That's it, right? ARB, not interested until we reclaim that for obvious reasons, right? Not interested until we reclaim that. GMX, breaking down from your weekly supply zone. Again, not interested at this area until we now probably go and rate the lows, in all honesty. 1162. Look to AVAX, look to Powell. Cetus. For DeFi, this is an amazing one, okay? So I was waiting and I was saying, if you guys want my YouTube videos, right, that I put out, then I was waiting for this 886 for the longest time. We finally have it, right? We do have a bat here on Cetus. 0.495, 0.886, 1.89, 0.886. We have hit the bat, right? So I've originally, I was in Cetus from the last plays we did on this. Again, this was September entries, right? So if I zoom in here and I go to group 2, right, again, this godly is why we entered Cetus back in September. This flip gave us 573% gains, right, between September towards the end of the year, basically, right? Now, if you missed that, I know loads of people asking me about Cetus up here. Like, I can't give you entries here, right? Which is why I just said, just wait. You'll get better chances. Just wait. People, it's like that FOMO. If you got in, they would have kicked you in the ass, right? This is why you wait. You only buy when the time is right. You wait for the market to come to you. If you initially miss Cetus, we are literally flipping. You basically got the same entry we had back in September, okay? And you have a wave structure to go with it. So I've opened a separate leverage play for Cetus, right, as a swing long. And my invalidation is, look, if we go and we lose this box down here, right, we have a few boxes where I'm willing to do it, but on the lower time frame, if you go and start closing below 0.023, I'm just going to close, right? Because then we know we could chop down here. Anytime we get below, I'm going to close. And anytime we get back above and reclaim, I'm just going to reopen. I'm a very proactive trader. I don't like to be very passive. I'm very dynamic when it comes to trading. So anytime this is lost, close. Anytime this is reclaimed, open. It's going to be my personal strategy for Cetus. Okay, but just understand, we have got a completed wave structure. Macro trend is to the upside. So from here, we would not be surprised if this did go and put in another high, right? If we went up, because Cetus, if you're not familiar, is going to be the DEX for both Aptos and SWI. And I think both Aptos and SWIs, as their respective layer ones, are going to do amazing. So obviously, you saw what happened to Uniswap when Ethereum blew up. You saw what happened to PancakeSwap, all of these, right? Last cycle, to SushiSwap. Cetus is going to be home, as it's going to be the DEX to both Aptos and SWI. So it has the effect of, okay, SWI pumps, Cetus is going to get some of that. If Aptos pumps, Cetus is going to get some of that. So if then both go into a full-blown euphoric bull market, right? Aptos is hitting $30, $40, $50, right? Just targets off the top of my head. SWI's hitting like double digits, right? $20, $30, $40, maybe even if you go euphoric enough. Cetus is definitely going to reap the rewards. Okay, so this is something I want. If you're confused about what to do for a DeFi play, in my humble opinion, you have one right in front of you. Cetus is the DeFi play I'd go with. But that is Cetus, right? Completed M shape, looks really, really good. You can throw on, diagonals, you can throw on everything. I'm just giving you guys a macro perspective right now, right? Cetus, and then another one is ENA. I think ENA is also really, really good. I'm in ENA myself. I gave this one in my last YouTube video. Very obvious reasons, right? So I had these targets for ENA, this first white box and the second one. Yearly levels, you had macro bats and the ABCD, which you haven't hit, so I do hope for one more drop. The reason I shorted earlier, someone asked why did I short ENA? ABCD 2.0 is resistance, right? So what was one support is resistance over here. You could see this as an inverted smiley face if it closes like this, which is why I've just scalped to short. But I've got three different plays open for ENA right now, which is spot, which is a more, and then I have a more dynamic leverage play, higher leverage to really make money on the shorter moves, and then I've also got a swing open, right? So these are the reason for that is because I've already described in my YouTube videos, but you know, you have from previous ranges, right? You have loads of point of controls, value area highs and value area lows. Your macro point of controls just above you. You have completed wave structures, and you have, you know, support and resistance levels on the 6 months to that you're bouncing off of, putting smiley faces in as well. Right, that's the reason I got into ENA. Now, if you're not in ENA but you want to get in, one or two things, right? You either wait for the flip of this yellow line and get in, right? Or what I would prefer instead is if you came and you on the higher time frame you started to see 0.3942, which is your current macro point of control, right? This is of the entire range. Your current macro point of control in terms of fixed range volume profile. If that gets reclaimed on the daily or above, even 4 hours, depending on what time frame you want to enter from. But as long as that is now being used as support, you can base entries off of that to try and get a run towards 55 cents, in my opinion. Go and take out all of these. But ENA, I have ENA in my portfolio as an ETH beta play for sure. Yeah, ENA looks good too. Apart from that, let's take a look. Anchor, not interested until we reclaim trend slash wave structure. So Anchor, nope. Rune, I have like a just, you know, basically zero hero bag on this simply because of where it is on the chart. DYDX, again, this is now some DeFi plays, right, or even sex plays, but low risk entry here if you wanted to, but ultimately nothing's going to happen until you reclaim those higher levels back into support, right? These ones up here. Metis, another one, until you reclaim this back into support, I'm not interested. Maker, now this one, definitely I've already got a position open on this because I told you guys I'm entering when we got the actual 886 fill finally, right? We had the BAT 886, we had the 2.618 of the BAT, we had the ABCD 2.0, and we also had the 1.13 right here, right? So that's why I entered here, move up. So now I think if you're looking for a high low on this, I'll do so somewhere in this region, right? You have a 0.5 in terms of a fair value gap. The mid, you have a yearly level there, so somewhere within this region is where I look for a in fact, let me do this. Somewhere within this region is where I look for the high low on Maker to come in. If you get the high low somewhere here, you would also have a smiley face, i.e. a cumulative structure, and that's something you can enter on, right, to go higher. Targets on the higher time frame for MKR, firstly is the 886, right, of the shark. If you get above the 886, it'd be the 1.13. So a raid of your 2021 yearly levels. Basically a raid of this high. Since we've already raided this, we're now going to raid that. So if you want to enter MKR, just keep an eye on that zone I just mentioned. Right over there. Farcoin, another one that I'm in, right? Just because it's got potential in terms of a meme, in my opinion. Loads of clusters here, right? So we have macro 886, alternate BAT 1.13, ABCD 3.618, ABCD 1.618, which is what we last wicked into. If we lose that, we have two final zones in 2.24 ABCD and 2.0 ABCD, all from different wave structures on the way down, right? So I'm just this is something I'm playing super lower time frame to higher time frame, just lower time frame to higher time frame, right? Because we could keep grinding down here, obviously. So I'm not going to just build a massive swing without even confirmation of a trend shift. So scalp to swing mindset is what I'm trying to say. If you lose ABCD this, you just target that. If you lose that, you just target this. If you lose that, you target this, just level by level, right? And if you close below that, then it's over, and you're probably just gonna fade into obscurity. But Farcoin at these current areas, you know, I'm interested in it because, you know, if we do manage to base here and then we ever reclaim this level, in my opinion, this has room to send, right? Even if it doesn't go back to all-time highs from where we currently are, even just to here, right, into 2024 mid retest, is a 400% increase pump. And should, like, for some reason this go on to even make new highs in the future, you have more than a 10x incoming. So it just makes sense for me to be looking at this as a meme play, right? Yes, Doge is a meme play, but I think Doge is way too serious of a project now to actually call it a meme, which is why I'm calling this. Okay, So that's Farcoin. This, not interested in this. Ignore this. Ignore this. Dot. Another one, just like Aptos, Polkadot is holding very, very nicely at its PRZ, right? Pretty much the same area where September entries were given again, right? We wrote that up. Now it's back down, back to entry again. Back at the same area. So literally the same thesis as September still applies. In fact, I'd say one stronger, because anytime you come back here, buys keep showing support, right? So you just have more and more and more confirmation that this is just extremely strong support for Polkadot. Someone is bidding here, basically, right? As long as this holds again for Polkadot, you know, you have a play on your hands. You can very, very easily manage your risk in this area. In fact, what I do is, if you start closing below this level, and more specifically below the mid, below let's say $4.27, I'll just cut until this gets reclaimed. That's it. Right, just stay active with your portfolio management at this particular point in time. You stay active now, so you don't have to stay active once things start pumping. Once things start pumping, you just set your limits to sell, right, TP, or you just watch for when you think distributed structures coming in. You just watch as your portfolio skyrockets in value, right? People think you have to be really, really active when markets start going up, and you just don't be active now. In my opinion, that's not the case. You be active now to limit the loss on your current portfolio value, to make sure you have averages built in at good prices, right? And then once you do your final size up and you're fully allocated, you just wait for those massive impulsive moves up to ride your port up, and you just sell once you're either happy with your profits, your targets are hit, or if you're like me for spot, I just wait for macro distributed structure to come in and you just sell. Right, that's it. Just layer out. But Dot's a good one. Very, very key areas. Tara, this is another one to watch. This was in my September entry videos, right? Here you go. Tara had originally, the reason I called this was there was a bat. There was a bat to a cumulative structure, right? There was a reconfirmation of the bat. That gave us a nice move up. So that bat gave us a, from September, right? So this is right over here. September, we called it here. We got the retap over here. This is when we were talking about it, 286% up. We came back down, created a weekly bullish order block, right? And then we reacted off the same area again, right? So this is a valid type 2 return of the bat, and that is for now successful. Right, so you're within the falling wedge kind of structure. So if you're not in right now, maybe just wait for that flip. But you know, either you, for me, to add to this, you either get that raid scenario here on the black, or you get that flip scenario on the white, right? If you wanted a local play, you do so around the gray box. But since this is a low cap, even though it doesn't look like much, that's still like 18 to 20% you're dealing with, which is why, you know, unless you're at the gray box itself, I wouldn't enter anything, right? Either wait for that breakout retest or wait for entries at the gray box itself. But for a low cap, I think Tara is a good one. And you know, since these lows have been held, that's an 886, right? And if that's an 886 and that's a 786, again, we're looking at the 1.272, a butterfly that could potentially take you up between 5 to 10x, depending on where your entry is within this zone here. Right, but you have a butterfly taking you back to the upside on this one. Nia, that's another good one, right? You have a completed Gartley, you have a 786. There we go. You'd have a completed Gartley on Nia. Again, very, very easy to manage your risk over here. This is something very, very wide I gave like a few weeks ago in case anyone wanted to just have one hard stop and that's it, right? Or if you're going to be more active, you're not going to cut here. You're going to cut as soon as basically $2.58 is lost. If that is lost, you just get rid of your whatever Nia you have. But honestly, beautiful area to, again, have some exposure to Nia on spot. You have a completed Gartley, right? You have a completed M shape here. Add key support. You can see resistance, support, resistance, support, 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 resistance, resistance, back to support, support, and support again. Very, very reactive zone. So Nia is another one that is at very, very good areas. Pepe, I would only enter at the reclaim, right? So I'm just speed running through the coins I'm personally looking at myself. If Pepe reclaims this, you're reclaiming some very important areas, so I'd get in. If not, I won't do anything with this right now. You're below very key levels, right? So I wouldn't be surprised if this did have one more flush down towards, let's say, the X point. If we rated the X point, then you know you could go down towards like 46, rate 39, as long as you keep trading below this. So a reclaim is paramount on Pepe. We need that reclaim. Below this level, nothing's going to come. Even if you reclaim this, yes, you can have some on spot, but I'd look to scalp to swing mindset this until you actually get back within trend, right? So there's some work to be done on Pepe now. Nothing really on this. It's not something I'd personally enter on myself here. There was an entry I gave on this one, I believe, back in, where was it? Yeah, so I gave a spot entry on this back in 2024, right, as a trade and spot. So I know a few people took this in spot, and then they actually held this all the way up here. I didn't do that. I took this as a trade, and I was out by, my moon bag was out by the time this happened, right? Because obviously I want to be aggressive with my profits, rotate things around as a trader. But for people who held spot, this run up really nicely. Over here, like, I'm not going to give you a trade simply because I wouldn't enter on over here, right? If it honestly wanted to, it's like go to the monthly even. This is the area I'd look for first and foremost. $5.95 first. If you lose that, $5.17. If you lose that, $4.39. Three key levels, right? You just look for a reaction at those. If you get here, you're looking for example, successful tests of $5.95. If you start getting counterbody closes above and the retest is successful, you enter a play with stop loss below retest with close, for example, right? And you take it to a risk to reward that you're happy with, or you take it to key levels like this. If you lose that, then at the SFP you can enter on the short to try and take it to 517. You just do this level by level at this area. Over here I wouldn't enter on. Personally speaking, of course, like you guys can do what you want at the end of the day, but I'm not interested in at these prices here. Like if it goes up from here, great, right? Like it's what it is. I think there's way better plays in terms of risk to reward. So that's on. And last but not least, the last one I'll go over is Toncoin, because I think this looks absolutely amazing. Ton, if you look at what it's doing, in fact, let me go back to here. We go to the crypto chart instead. Right. Again, all of these levels on the screen, even though they look like a lot, is all yearly levels, right? They're all significant. They're all made after yearly closes. So you can see we have this very nice range over here on Toncoin, right? You broke out, never retested, you're getting the retest now. So if the retest for these areas end up being successful, then you basically said, yeah, this area where sellers were in control over the buyers, supply was greater than demand, is turning into an area where buyers are in control of the sellers, demand is greater than supply. That is something you bid, that is something you long. Okay, this narrative here. We just need confirmation of it. But yeah, Ton looks absolutely amazing in my opinion. We're coming down for the retest now. If you do get a slightly deeper wick, like I was looking at this other chart, then maybe you get the 786, right? Have you already gone past the 618? Yeah, we've already gone past the 618, right? So I'd be looking for that 786 or reclaim of the 618, one or the other. But if you do come back slightly, like you're going towards 2023 12-month key levels, right? So that 786 would be nice. If that 786 held and you reclaim, which is what I'm hoping happens, 1.272, you're looking around $10 ton basically, right? And if you lose that red box, then you're going to get the 886. You're going to get ton even cheaper. By the end of the day, it's still going to be a good bid down at this area, because you're still going to be bidding at a very, very significant level here. Right? So no matter how you look at it, Ton is going to be approaching very, very key areas. So now you just wait and let price action tell you what's happening. Right? What's happening? Is one showing strength over the other? If you take a look at Ton against BTC, A, B, C, D, right? 4-point wave structure, 382 right over here, 2.24 right over there, right? The first target is hit. So in terms of risk to reward against Bitcoin, it doesn't get better than this, right? You just do this. Your risk to reward is literally so simple. You just do this. You put your stop loss below the D. Right, so you have a 6.45% risk basically, and even if you to test something like this, that's a 5.07 RR. I.e., Toncoin could start outperforming Bitcoin, is what we're saying here, because you've hit deep extension and you've retested it to be successful, right? So now you're looking for that move up. What about Ton against ETH? Ton against ETH, I don't really see much, so we'll hold on to this for now. But again, even against ETH, you can see how bullish it is against ETH, right? Overall, you're saying, in terms of cycles, there's going to be periods where ETH takes rotation. So maybe we get a period now where ETH gets some rotation, right? ETH gets money flow. Maybe we get a drop on Ton against ETH because ETH's outperforming. But once this 886 hits, if it ever hits, that's once again an area where you're going to be like, okay, let me take profits off ETH and put into Ton, because it's going to start outperforming ETH should that hold, right? But that has been everything I wanted to go over today, guys. I'd love to go over more, and especially if you guys had any requests, but I need to head off into my business, so I just need to get some food real quick. Thank you so much for your time today. I'll do something on XRP next time I stream, brother. hang on, let me do something for you real quick then. One sec, let's do XRP. I'm still in my XRP play from 56 cents. Again, that's the reason I call this in September, right? I've been talking about this for a long time, as you can see. Massive wave structure, you had a completed bat, and then off the bat you had a cumulative structure coming in, high lows, high lows, high lows, and then smiley face. This is why, especially even back in September of last year, we were talking about this. Last time I called this was in my own group back in September of last year. Sorry, yeah, September last year. I called it out as well, specifically my own group as well. And then yeah, we just got an insane play of this, right? So I've took some off. I need to size up, but I've not sized up yet on my swing. Again, I'll show proof of this. I'm not just going to talk on my ass. I'll show proof in a minute. But you're just ranging between yearly levels. That's what you're doing, right? So on the left, yearly levels here, yearly level, yearly level. You're just ranging between that, right? Yearly level, yearly level, yearly level. So I wouldn't do anything on XRP here. Only time I want to bid is if we get a rate of the lows or if we break out from the highs. Just because I don't want to ruin my average for no reason, right? I want a good reason to ruin my average. Right now, this looks a bit distributive to me, so I wouldn't be surprised if we did do something like this. Okay, I want to see a raid, reclaim, and then send it perhaps, or just give me a breakout, a clean flip of this into support. If that happens, one of these two scenarios I'll size up in. The one thing I'm not going to do is size up in the middle of nowhere. No raid, no trade. That's it on XRP. Okay, now I truly have to go. Hopefully that was helpful, guys. I will be doing more of these now that I'm back properly. Thank you so much for those of you that did come in. If any of you are interested in the way I trade, just reach out to me. I'm opening up my one-on-ones again after next week. So, you know, if you're interested, reach out. If not, catch me in my YouTube videos. Catch me in, you know, streams whenever I do here. I'll stream more when I get the chance. And then, yeah, if you do want to learn the way I trade personally, just reach out to me in one-on-ones and we can discuss it there. I'm just going to open my one-on-ones again from next week. But thanks so much, Robin, bro, for putting me on here, bro. Right, I need to go, guys. I'll put the recording up on my YouTube.